Hey everybody, it's Mike. It's April 15th. It's tax day in the US, even though I think they extended it out to May, another month for everybody, which is always nice. It's always the time after tax day in the US, April 15th is always, we always get a nice little rally, but it just seems like this rally has been going on and on um, since the beginning of the year. And people ask me, how can I use order flow to see what's happening in the market? Because sometimes they can't make heads or tails of this rally because it just, everything says, the market shouldn't go up, but it keeps going up. And I'm going to show you today how you could use order flow to see things in the market rally that other people can't see. So, whoops. What you're going to learn today is why order flow is so valuable to a trader. I'm going to show you how to put the pieces of order flow together, and I'm going to show you how to recognize actionable order flow. And what do I mean by actionable order flow is trades that you can take based on the order flow. The way I like to describe order flow, it's almost like reading a book, and the market is a story that's constantly being updated and new chapters being put on, and it's just fascinating how you can read what's happening in the market based on the trading that's happening out there. So those of you that are new to who I am, my name is Michael Valtos, and I'm the owner of Trader at Orderflows.com. I started this in 2015 after I left JP Morgan. I spent 8 years at JP Morgan as vice president of futures trading, on the trading desk, actually trading, not sitting in an office looking at spreadsheets and, saying, oh, the risk is too much or anything. No, actually on the desk, pounding out trades from 6 in the morning when the markets opened until 5 p.m. at night. I was based in Singapore, so that was the Globex reopened, after the main session closed because we're in Asia, and up until, basically almost, mid-morning in London time. Prior to that, I was with Cargill, the big commodity trading firm in the U.S. It's probably this, I think it's the second largest privately held company in the United States. They got over 130,000 employees all around the world, and they trade everything you can imagine. Before that, I was with Commerce Bank in Chicago. I was their licensed Eurex trader for 3 years. I spent 2 years prior to that at EDF Man, also the big English trading company, been around since the 1700s. And I started on the CME floor with Dean Witter, and I left the trading floor when electronic trading started taking hold back in the early 90s. That was probably one of the best decisions that I made in my career, because I realized, what, I was in my early 20s and computerized trading was just starting to take off. And I realized, what, that's where I want to be. And, it was just amazing watching the growth and unfortunately watching the floors close down. And, one of the reasons why I like doing presentations like this is because, I was able to get started on the trading floor. Back when there were trading floors, you could go down to the trading floor and literally stand outside the front door, ask somebody for a job. I knew a person that was shining shoes outside the exchange, and eventually they ended up landing a job because they were shining the shoes for one of the traders and said, "Yeah, sure, I'll give you a job." Now you don't have that entry, right? Now, if you want to get a job at a bank or a hedge fund or a trading firm, you have to have graduated from a certain school with a certain background and all that. Whereas before it was the barrier to entry was so low that almost literally anybody could go get started. And so I learned a lot in my over 20 years of institutional trading, and I like to share it with people because they just don't have that access to knowledge. Now, after I left JP Morgan, I left it in 2013, and I was trading for myself using order flow, using everything that I've learned about order flow over the years. And there was software out there which was just pretty basic order flow analysis software. And I realized, what, the computer can do a lot more for you. It can analyze the information that you're seeing. And so around 2014, I started working with a programmer to create my own software, right? Basically take the order flow software that was out there and improve it, right? Just like Steve Jobs didn't invent the mobile phone, right? When he created the iPhone, he took the existing technology out there and made it better. And my software runs on NinjaTrader 8. It's called the Orderflows Trader, and it's a volume footprint chart with 17 pre-programmed order flow indicators or tools, which I do show you some in this presentation. And the reason I just talk about this really briefly is because, the charts that I use in this presentation are generated from that software. Now, I also wrote a book on trading order flow. I like to say I literally wrote the book on it, but there had been no good information for traders out there. So, in 2015, I also, I was trading and I started writing my book on order flow. And if you stick until the end, I'm going to show you how to get it for free. Okay, it's 150 pages. All you got to do is just go to the link that I'm going to give you, and then you can download it to your iPhone, your tablet or whatever, your computer, and print it up if you like, or you just read it from your iPhone. Now, before I begin, just a brief disclaimer. Do understand that trading involves risk, and only risk capital should be used for trading. Okay, so let me ask you. Most of us, we're familiar with looking at a normal candlestick chart. Okay, and when we look at a normal bar chart or candlestick chart, all we're really doing is one thing. We are following price. Okay, and the way I kind of describe it sometimes is it's a bit like going up and down a ladder, right? Because candlestick charts are a little bit different than a normal bar open, high, low, close chart in that they have colors, green for a bar that closed up, red for a bar that closed down. And it's a bit like going up and down a ladder, right? The market goes up, then you get some red candles. It looks like it's about to go down, but it goes back up. But really what it's more like, it's like this child's game called, Chutes and Ladder or Candyland, where you're going up, you roll the dice, move a certain amount forward, then, oh, you got to go back down, and the market's a bit like that. And if you're just watching price, right? You're just seeing where the market was, right? It's not giving you much clue into where the market can potentially go, right? And as a trader, that's what we want to know, what is the path of least resistance? Where is the market going to be going? Now, where does the information from the bar chart come from? Well, it comes from the time and sales, right? What actually traded in the market, right? The market's traded in a two-way auction. There's a bid and there's an offer. Now, the time and sales just reports what traded, at what time it traded, the price it traded, and the quantity it traded. But the problem is now with the markets move very fast, very quickly with a lot of volume, this is just literally 2 seconds, right? And there's probably more information in here. And you can see there's a lot of trades going through. It's a lot of one lots, two lot, one here's 6, here's 5, a lot of ones. And you see, orange or red prices, you see green prices, and a lot of people can't make heads or tails of it. But all this information that you're seeing here is what goes on a bar chart. But there's a lot of information here, right? Most people think that, for every buyer there's a seller, and there is, okay? But there's different types of buyers and sellers. You have aggressive buyers, you have aggressive sellers. You have passive buyers, you have passive sellers. The way to think of it is aggressive sellers sell to the passive buyers. Aggressive buyers buy from the passive sellers. And the best way to think of it is when you're trying to buy a house right now, right? The market is crazy pretty much everywhere in the world for buying a house. And you know that if you're trying to buy a house, you got to be very aggressive, right? Say the house is listed at $500,000. You got to just, if you like it, you just got to buy it, right? And sometimes you got to offer even more money, right? You are being the aggressive buyer, right? The seller is happy to sell it at 500,000. Now, say this property market crashes, right? And all of a sudden it becomes a buyer's market. It's the sellers who will be aggressive, right? So your house, if you're the seller, right, you're trying to sell this house for $500,000. All of a sudden now the market conditions have changed. There's no buyers. So what do you have to do as a seller? You have to be aggressive. You have to find where there's a bid in the market. Maybe there's a buyer there at 450,000. Okay, you'll sell it to them. You're going to be the aggressive seller because you're selling to the buyer. That's like, yeah, I like this house, but there's so many houses now on the market. I'll pay you 450 for that. Okay, I'll sell it to you there, right? Whereas now we're in a seller's market where it's the buyers who are aggressive. Now, probably about, when electronic trading really started taking hold back in the early 2000s, even though electronic trading has been around since the 90s, the depth of market has become a tool that a lot of traders started looking at. And again, the market's trading a two-way auction. So what you have is volume on the bid. Now you could look at volume on the offer as well, as opposed to just looking at the volume that traded. And so you get an idea of where the passive sellers are, where the passive buyers are, right? Where people are happy to buy below the market or sell above the market. And again, remember, aggressive sellers sell to the passive buyers. Aggressive buyers buy from the passive sellers. That's what makes the market go up or down, is what the aggressive traders are doing. Are there aggressive sellers or are there aggressive buyers? People that are clearing out the liquidity in the market, right? Liquidity is, the resting orders in the market, right? Either above the offer or below the bid. Okay, but again, reading a depth of market, just like reading a time and sales, is very difficult for a lot of traders, right? I mean, it's easy to look at a video and see somebody, oh yeah, I'm going to sell here, I'm going to buy here, there's a big bid here, I'm going to do this. But it takes many, many, many years of experience and many, many years of trial and error as a trader to really get it going. Honestly, about 5, 10 years ago, the markets were a lot calmer. When we're trading 1,200 in the S&Ps, we would have a 10-point range for the day. Now we're getting 40, 50-point ranges. We're getting bars that, price ranges in 1 minute of 10 handles. That's, in the past, that was one whole day. Now, if you're trying to read a dome, the market's moving too fast that you can't make good trading decisions consistently. You could find some good trades, but being consistent is sort of the holy grail in trading. People always say, what's the holy grail in trading? It's about being consistent as a trader. But interpreting what you see in the dome and time and sales, it's like being in the water and being thrown a life preserver, right? The life preserver is your dome or your time and sales, but you're gonna sink, you're gonna drown. You still need more help because it's just moving too fast, right? It's not like the old days where things would, imagine trading in the night session now is what it was like trading in the day session 5 years ago, 10 years ago. It was a lot calmer in terms of market activity and price movements. So what somebody developed, I didn't develop this, is the volume footprint chart, okay, which takes the information you're seeing from the time and sales and puts it into an easy to read chart. And it's from that footprint chart that you can make good trading decisions. And there's 3 main points of order flow: delta, point of control, and imbalance. So what makes the footprint chart much different than, say, your normal bar chart is you can see the volume. You can see the volume traded on the bid. You can see the volume traded on the offer. You can see where the most volume in a bar traded. You can see how the market reacted at the extremes, at the high or the low of the bar, at the high or the low of a swing, at the higher or low of the day, right? And that's very valuable information as a trader. Now, I'll just briefly explain what the 3 pieces are. Delta is the net difference between aggressive buyers and aggressive sellers, right? And it's important to know so that you know who is dominating the current market as shown in the bar, right? It's people get so complacent looking at a bar chart and say, well, the candle is green, so yeah, I know buyers are in control, we closed higher. Yes, that's a basic way to look at it. But when you start looking at the volume, you can interpret it in a few different ways to show you times where it's actually very strong or if the market is weak. So volume, the delta is the difference between the volume traded on the offer versus volume traded on the bid, okay? And delta in most software on footprint charts will appear at the bottom. So, you'll have negative or positive, and sometimes it'll be 0, just coincidence, but generally red bars will have negative delta and green bars will have positive delta, but you're gonna see bars like this. This is a green candle, but it's got big negative delta, okay? And I'm gonna talk about that a bit later. Now, point of control is the second part of order flow that's important, is the price level in the bar with the most volume. Now, there's no mathematical fancy formula to determine it. It's just simple arithmetic. You take the volume traded on the bid at a price and the volume traded at the offer on a price, and if at that price in the bar it's the most volume, that's your point of control. Every bar has a point of control. Okay, I just highlighted a few here, right? You can see on this red bar, it's highlighted with like this gray rectangle around it. Every bar has one, right? Whether it's a red bar, a green bar, or even a doji bar, right? A bar that opens and closes at the same price. Now, I've highlighted this golden one because this is one of the things that I want to talk about is having software that's going to do some of the order flow analysis for you and tell you, hey, you know what? This point of control matters. This point of control is support, or in another case, this point of control is resistance, right? So, that's how order flow is going to help you in terms of analyzing volume. So now you have volume in the bar where the most volume is. You have volume in terms of the difference between the aggressive buyers and the aggressive sellers in a bar. That's the delta. Now, the third part is imbalances. Market imbalances occur when there are more aggressive buyers than aggressive sellers, or vice versa, more aggressive sellers than buyers in the two-way auction. Remember, a market trades in a two-way auction. It's 26 bid at 27, right? And how the market reacts when it trades 26 versus it trades 27 can give you clues, right? That volume that's traded, if you have an imbalance, you can have a buying imbalance, which would occur when there's at least 4 times as many traders buying the offer than traders selling the bid. A selling imbalance is the opposite. It's when there are at least 4 times as many traders selling the bid than traders buying the offer, right? And think of an imbalance like this, right? You got the elephant pushing the car, right? You're driving down the road in Africa and you're in your little car, rental car, and there's an elephant in there. You think, I could take him, I'm in a car. Well, the elephant just comes right up and pushes you out of the way. That's an imbalance. Right? The elephant is much stronger and much bigger than you, okay? And you're going to lose. So in a bar, right, on the footprint chart, there's red numbers, there's blue numbers, and there's black numbers. Your normal trading that's happening is a black number in the bar. There's nothing special, right? That's just the normal trade. But you're going to see in a bar red numbers, right? You see 11 against 1, 19 against 1, 10 against 3, 14 against 0, 4 against 22. These are selling imbalances, right? Just as you have blue numbers, which are buying imbalances, 3 against 88, 1 against 5, 17 against 60, 12 against 40, 9 against 39. These are buying imbalances. And what it's telling you in the two-way auction, if you have a buying imbalance, there was more aggressive buying than aggressive selling, right? When the market was 70 bid at 71, you had 12 aggressive sellers versus 40 aggressive buyers. Okay, so you have an imbalance at that price in that bar. Okay, and so now you're taking the volume that's traded in the two-way auction and you're able to come away with something that you can use to trade around, right? Because you know that if you have aggressive buying, what do you think the market's going to do? Generally, it's going to go up. If you have aggressive selling, generally what the market, the direction it's leaning towards is coming off. Okay. Now, generally, like I said, as the market rises, you see buying imbalances. Aggressive buyers are lifting the best offer and looking for the next best offer, right? They're cleaning out the whatever's on the offer and they're buying the next one, right? Just think of it as, um, when at Christmas time when there's the hot toy, right? That every kid needs. And you go around, you're looking for it, and prices just keep going up, is because everybody is buying that supply, and the sellers know that they could sell it for higher, right? So they mark the price up because the demand is there, they will buy it. Whereas if the market is falling, you generally see selling imbalances, right? Aggressive sellers are selling into the best bid and looking for the next best bid to sell into. Why? It's because now there's a lot of supply in the market, right? So they're happy to keep selling it as the price goes down at lower prices because they have a lot of supply they have to get rid of. So what what's the whole point of order flow? Well, it answers the question, what is the market doing? Right? That's the question that you always want to be asking as a trader. What is the market doing? And again, most traders look at a chart and try to figure out what the market is doing and where it's going based on incomplete information, right? They're just looking at price, right? They're not looking at the volume. And this was crude just yesterday, right? Remember, crude had a nice rally yesterday, but sort of midway up in this rally, the market hit the high, came off, and then just sort of went sideways. Well, as a trader, you want to know, okay, well, why is the market pausing in here? What's causing it to stop in here? People can say, well, I'm looking at the candles, you got small ranges, you got a doji here, it's tested this. But, as a trader, as it's happening, you want to know why it's acting like that. right? This is that area I just showed you on the previous chart. I just took it out of show you on a bigger scale is volume, right? Volume is telling you that there's support here, okay? And that's really what you want to know as a trader. Where are areas where the market can stop? Where are areas the market can trade through? Volume, right? Well, the price stopped here because of volume, okay? Obviously, you have this point of control right down here. You can see the volume, 196, right? And people say, well, you have negative delta. Isn't that bearish? Well, technically it is, but what you have, remember, you have an selling imbalance here, 196 against 41. You know, Mike, you just said if you have aggressive selling, the market should go down. But actually, you take it a step further. That's why I said think outside the box. Don't think in terms of, well, I got aggressive selling, it should be short. What you have here is you have support in the market. You have a buyer that's absorbing all the aggressive selling that's going on down here. It's causing the most volume in the bar at the low of the bar. You have 196 against 41, so you had very strong selling, but there's a buyer here. Yeah, sure. You want to sell some more? I'll buy it, right? Market started to go up a little bit, just went sideways, came back down. That buyer is still there. Now you see an imbalance of 63 against 21, right? Now, the thing with imbalances, the industry standard, right, what most traders use is 4-to-1, but a lot of traders use 3-to-1 and 5-to-1. But again, I said 4-to-1, but depending on the market that you're looking at, you can adjust it, right? It's not set in stone that, oh, it has to be 4-to-1. I use 3-to-1 a lot of times. I know a lot of other traders that use 3-to-1. I know traders that use almost 10-to-1. They use 987 for some reason because I think it's a fib number. But 10-to-1 basically you could look for as well. There's different ways of using imbalances to look for things. I mean, if you have an imbalance that's 10-to-1, right? 10 buyers to one seller. What do you think the market's telling you? It's telling you it's pretty strong in that direction. Okay, so you want to know those. But what's happened here? The market is stopping because of the volume, right? And as a trader, that's valuable information, right? Look at how this market reacted. From the 70 area all the way up into the 30s. Now again, I know a lot of traders will trade this like, well, you got this double top. I'm waiting for it to break out before I get long. You buy that breakout, then it sells off another 20 another 25 ticks before it goes back up, right? But if you're trading down here and you can see the volume that's happening, that's stopping this move, you could be getting long down here at 70 for the move back up, back up to 6,300. It came back down, it's holding these levels. Okay, maybe you put some more on and it goes up rather than, the way most traders will trade it is, oh, waiting for this breakout, take out the previous high. You can know what's happening down in here as soon as it happens. Okay. But again, it's not just about looking for areas of heavy volume. You can analyze volume in relation to how it's traded. That's where the order flow comes in, the delta, the point of control and imbalances. I mean, it's one thing to see, oh yeah, there's heavy volume at this price. That's important. I can trade around that. But you don't always get those crystal clear examples, right? That's why you got to look at the order flow, right? And here's the market. This was E-minis yesterday, right? Market's selling off nicely, right? You've seen a lot of selling imbalances on the way down. That's what you like to see, okay? You're seeing the negative deltas for the most part, minus 1,200, minus 1,500, minus 3,500. I mean, you do have some little bit of buying that comes in once in a while, 400, 472. But then as it comes into this bottom down in here, what do you start to see? Well, you start to see several bars with buying imbalances. Now, there was some buying imbalances here. Okay, I mean, this market looked like it was getting primed to rally in here, right? But you're not getting the follow through, right? You got a bar with 1, 2, 3 imbalances, buying imbalances, which is good. But then this next bar, there's no follow through, right? And obviously you got the negative delta. But as you're looking in here, right, as you're coming down, very strong negative delta, 1,200, 1,500, 3,000. All of a sudden it gets very small, minus 118, minus 500, minus 257. Now you got strong positive delta, 400, a small delta, 135, then a nice strong positive delta, 1271, right? And here you got 1, 2, 3, 4, 5, 6 buying imbalances, okay? in this bar. So that's good, right? You're seeing the aggressive buying coming in. You're seeing the imbalances come in. You're seeing points of control go higher, basically, from the low here. I mean, this one's more or less the same. It's one tick lower, higher point of control. So basically you got 1, 2, 3 higher points of control, 4 here, and the market put in a little bit of a rally, right? That's how you could use the different pieces of volume, right? You don't have to analyze necessarily every single print that goes through. Oh, it traded 614 here and 702. No, you could just look at, okay, what's the delta doing? Is it growing? Is it getting bigger positive or bigger negative? As we're coming down, eventually lows are going to be made. And as you come into lows, you start to see the selling weakening in terms of the negative delta, right? It tends to get smaller, minus 118, minus 585, minus 257. Then it starts turning positive. For a market to start rallying, you're going to need to string together bars with strong positive delta, which you're starting to see here, 400, 1200, 600. Okay, and obviously the points of control are going higher. On moves down, points of controls generally go lower. Again, this was also yesterday in the E-minis, right? What does order flow tell us? Well, in this blue box, it's kind of mixed to a little bit bullish, right? In the red box, it's definitely bearish, okay? In here, it's mostly going sideways, honestly. You're seeing some buying imbalances. Delta is kind of mixed. You're seeing some positive, some negative. But you see, some bars with nice positive deltas. Again, points of controls are sort of lining up almost at identical levels. Here you got 3 at the same level. Here you've got 2 back to back, 2 back to back. And again, it's just sort of choppy. But then you get up in here, right? You can see delta turns negative, 122, but then minus 22, which is small, 16, which is small. I sort of treat those as neutral. Then minus 300, right? Minus 700, okay? And what do you see now? You're seeing a lot of selling imbalances. You're seeing 1, 2, 3, 4, 5, 6, 7, 8 imbalances, selling imbalances, right? Before you even get to this red bar with 3 more selling imbalances, right? With the nice big negative delta. So if you're looking at this group of 5 bars, what you're seeing in here is kind of mixed to maybe a little bit bullish, but in here it's definitely bearish, right? What do you think the market's going to do? Someone's going to say, hey, you got to take a trade. Well, you got to get short, right? You're not going to get long. You're not be looking to buy in here with all this selling coming in. And that's where the volume is going to help you, right? Volume in the difference between aggressive buyers and aggressive sellers, in the delta, imbalances, in the two-way auction, and points of control. Because as the market goes down, it's looking for, imagine, right? There's a lot of supply coming into the market. Traders are looking for an area that they could move a lot of supply. And if the market is getting overwhelmed with supply, it's going to be trading lower, right? The volume is going to be trading lower. They're happy to sell it at lower prices because they have a lot of volume. That's why points of controls go down. Let's take a look at gold. Similar story, right? On the way down, a lot of selling, right? You see the aggressive sellers in the bars with the many imbalances, right? Then you sort of get down into the low, then you start seeing the aggressive buying starting to pick up, right? You see 82, 120, 48, 21, then 1, 91, 159, right? You got this nice move up, and on this nice move up, you're seeing higher points of controls for the most part. Here you got one that's one tick lower, this one's one tick lower, but then it jumps back up, higher point of control, higher point of control. Here, this bar's got 1, 2, 3, 4, 5, 6, 7 imbalances. This bar's got 4 buying imbalances, right? And you can see the delta is just getting stronger, right? It's gone from kind of mixed in here, 48, 21, and 1 to positive 91, positive 159. And you get this nice move from, the 35.5 area all the way up to the 38.5 area in basically 7, 8 minutes, right? The market is telling you, hey, you know what? This low is holding. Aggressive buyers are coming into the market, right? That's how order flow is going to help you as a trader. So let me ask you, how many times have you taken a trade and immediately it went against you? Right? It happens to all of us, right? It happens to me. What you do next can determine if you're going to be successful or not in the trade. And that's where order flow is going to help you. Do you let a trade stop you out, or are you willing to get out of a bad trade early, at a level with a smaller loss? And that's where reading the order flow helps you as a trader. It can tell you, hey, you know what? Conditions have changed in the market, you might want to think about getting out, right? You don't have to wait till the market stops you out. If the market is telling you, hey, you know what, you're long, but we're seeing selling coming in, you you got to get out, right? You don't need to wait for it to stop you out. Oh, there's a lot of selling coming in. I better get out now, right? That's where the order flow is going to help you, right? It's that market generated information. It's based on the volume, the market traded on the bid, and the volume traded on the offer at a price. It's going to tell you when the market conditions change, right? So imagine, right? You're in a short position, right? Market is making new lows. Yay, happy days, right? You're happy, you're short. Oh, then you get that big bar down, the beautiful bar down. It just drops from 40 down to 30, 36, and then it starts putting in these new lows. But then as it gets down here, you got to be asking, okay, is this the end of that move? So you start looking at these bars, all right, and you see a higher point of control. Okay, that's bullish. You're starting to see buying imbalances, right? You don't see the selling imbalances anymore, right? That you saw on these big pushes down here, right, with all the red in the bar. You're just seeing buying imbalances. Now you don't have to sit here and analyze. Well, it's 3 against 17. It's 11 against 52. It's 3 against 18. No, you just say, okay, I got buying imbalance here. I've got 4 buying imbalances here. I've got 5 buying imbalances in this bar, right? You see the delta. Okay, what's delta doing? Well, we're at the low. You've got positive delta. What do you think the market's telling you, right? That's a divergence in the order flow. If you make a new or equal low and you've got positive delta, well, all of a sudden now you got buyers coming into the market, right? That's important information, right? That people aren't picking up because they're not looking at the order flow. You know, that's what markets do, right? They go to find buyers, they go to find sellers, right? The markets go up or down looking for buyers, looking for sellers. You're at your low of the day, and all of a sudden, buyers are coming in, and they're coming in pretty aggressive. What do you think the market's going to do? Going to go higher or go lower? Well, chances are it's going to go higher. So you start putting these pieces together. Points of controls are moving up. Aggressive buying coming in terms of imbalance. Deltas are positive, so it's telling me overall these bars are bullish, right? And then the market makes a nice move higher, right? MNQ, right? This is a 20 range chart. Again, you got to be looking at what's happening in terms of imbalances, delta, point of control. And order flow is not about analyzing every single tick that goes through. Some people like to. I don't. I don't think you need to. But as this market's going down, right, you're seeing the aggressive selling, right? You're seeing the negative deltas. You're seeing the lower points of control. You're seeing the selling imbalances. Then the market just sort of goes sideways in here, okay? But then it starts to rip up, right? As it rips up, you're getting the positive deltas. You can see it down here on the bottom, the 21, 39, 80. You're seeing the buying imbalances coming in, right? You're seeing the higher points of control as you're finally starting to put in a move up. 1, 2, 3 consecutive higher points of control. Just as on this move down, you see consecutive points of control going down. 1, 2, 3, 4, 5 lower points of control. In here, it's kind of mixed, but then the direction at this point is clear, right? That it's going up. And again, like I said early, order flow is like reading a book, right? Understanding what's happening in the market, right? This is beautiful from the E-minis the other day. We came up to the high here at 41.19 and a quarter, then we sold off almost immediately. But as you're going up, what do you see? Okay, well, you see higher points of control, which is what you like to see. Okay, you're seeing some buying imbalances on the way up. That's what you like to see. But you're seeing negative delta. Okay, it's kind of mixed, 21, 61, minus 77. You got a nice bar here with nice positive delta, 722. But then it just sort of spins around up here. At the high of the day, you got negative delta. The next bar, also negative delta. But you're seeing, all of a sudden now you're seeing 1, 2, 3, 4, 5 selling imbalances, right? That's not good, right? You're seeing aggressive selling up here near the high. What do you think the market's going to do? Well, chances are it's going to fall over, right? And it just goes sideways. Points of control sort of migrate a bit higher, then they get mixed in here, but then they drop off lower, lower, lower. You're seeing the aggressive selling coming in the imbalances. You're seeing just negative delta. So you're up here at your high of the day, and you're seeing mostly every bar up here, right up at the high of the day, it's got negative delta. What do you think is happening? You got aggressive selling at the high of the day. Do you think the market's going to go higher? It might later, but for now, the direction is going to be down. That's the way you got to position yourself. So remember, right, for a market to move in the direction you expect it to, there needs to be follow through order flow. If there's no follow through order flow, what reason is there for the market to move, right? Your super duper indicator is not what makes the market move. Markets move because the actual buying and selling taking place in the market, right? Order flow analysis provides the trader that information they need to get that edge over other traders. That's what everyone always says. Any book on trading, any video, you got to have an edge. You got to have an edge, but they don't really tell you how to find that edge. Order flow gives you that edge. It allows you to see and understand what's happening in the market that other traders don't see. And that's one of the reasons why, I designed the Orderflows Trader, 6 years ago, is because I realized I could have the software do a lot of the analysis for me, right? I want to know where there's divergence, when we're at the high of the day and there's aggressive selling coming in. I want to know where there's market weakness in terms of looking at the delta, right? That's what these blue arrows are, is telling me there's market weakness, right? I want to know which points of controls are going to be bearish, right? Like these two purple ones, right? That's telling me these point of controls matter and they're bearish, right? That's resistance. Support in point of control, that's this blue point of control. That's where having good software helps you as a trader, helps you get an edge over other traders that aren't looking at volume, let alone looking at order flow altogether, right? They don't know that there's, at this high of the day, that there's aggressive selling coming in terms of the delta. They don't know that there's, based on the volume in the bar, that there's resistance up here. I mean, why does this market trade right up to this price, right? One tick below the point of control? It's because there's resistance based on what traded here, right? It's important to know that information as a trader, right? And again, let the software help you as a trader, right? Let it determine, hey, you know what, there's market weakness down here at the swing low. So you could position yourself that if you start seeing other things like aggressive buying coming in terms of imbalance, you could take the market back up, right? That's the information that order flow is going to give you an edge. Now, when I first released the Orderflows Trader back in 2015, one of the things that I put in it was what I call ratios, order flow ratios. That's why you see on some bars blue numbers above a bar or black numbers above or below a bar. And what it means, if it's a black number, it's just basically your order flow. That's your normal order flow. But when there's a blue number, right, that's telling you there's a ratio in the order flow by analyzing the volume in there. And depending on where it comes in, it's going to tell you there's either price exhaustion or price defense, right? Stopping volume, right? So that's why you often see, markets stop and reverse or stop and go sideways at areas where there's ratios. And one of my bread and butter trades is a divergence and a ratio, like you have right here. Where you're at your high of the day and you have a ratio, right? 45. First time you had your divergence, that's this red here, right? You got the negative delta 162 at the high of the day. Here you got negative delta 800 at your high of the day, but this time, based on the order flow in this bar, it's telling you there's price exhaustion the second time we hit it. There wasn't the first time. But this is a trade that, is sort of, always been one of my bread and butter trades. It happens all the time in pretty much every market. I'll say all the time, but most days it will happen at least once or twice. So it's a great trade to look at. And it's funny because when I released my software, by within 6 months, a lot of other software started putting these ratios in. But you know what? They never understood how to use it. So it's like, what's the point of having tools when you don't know how to use it, right? I mean, I use NinjaTrader, right? NinjaTrader's got 300-400 separate indicators in there that I don't use because, first of all, I don't understand a lot of these things. What's the point of having tools that you're not going to use? That's why everything that's in the Orderflows Trader is tools for traders to use, right? Because it's designed by a trader that's trading it, right? Here's another example, divergence and a ratio, right? A nice move down to where? Support, market generated support. And it moved up to where? Market generated resistance, right? That's these points of control. And again, even at the high of the day, knowing that there's 3 selling imbalances in this bar, you got your high of the day, but you got aggressive selling coming in. Again, that's more information that as a trader you can use. So hopefully you can see how powerful order flow analysis is, right? You don't need to overcomplicate trading. Just trade what's happening right in front of you. So if you found this helpful, you're going to like this package that I have developed for you, right? If you really want to add order flow analysis to your trading, raise your hand. Now, there's two ways you can do it, right? You could spend a year looking at the screen, trying to figure out order flow, waste a year of your life and more money trading. And when I ask you, next year, when you come to one of my presentations, how's your trading going? You just give me the thumbs up, you're still alive, but you're suffering. Or the easy way, get the education and software from a trader who has successfully traded order flow at the highest level for decades. Skip the massive trading losses, skip the wasted time. So you get the Orderflows Trader software for NinjaTrader 8. Again, it's the software that has 17 pre-programmed order flow indicators. I talked about two of them here. And normally I sell this for $8.99, right? But you're not going to pay that today. Now, I realize having order flow software is one thing, right? You got to know how to use it. So I give you a lot of education. Okay, so each week I do a live group training session just for users of the software. If you can't attend, you can watch the recordings. There's over 116 videos. So it's been going on for over 2 years. And again, other people sell you software for 4 figures and then charge you extra to learn how to use it, right? This is weekly training. You could come in, you could ask your questions. I do it all for free because I want you to get up to speed on trading order flow. Now, I'll also give you access to my order flow trading course, which normally sells for $297. There's 20 lessons, it's 15 hours of video instruction. But also, right, for those that really want to jump in, dive deeper, I've got the order flow inner circle video series. And normally I sell this access to just these videos. It's for $497. There's 56 videos on advanced order flow analysis, nuances, and tips, right? So you get all that for free, right? So you start adding all that together, right? The software, the training, the Inner Circle video series. I don't even put a price on the live group training because I think I don't want to say priceless, but you know, it's a way to improve your trading, right? That not a lot of people have access to, right? You could come in there, you can ask me any questions, and I'll do my best to answer them. Um, that's already $1,600. You're not going to pay that. And because of Investors Expo, I got even a special bonus for you. I'll give you access to my order flow playbook, which is additional training, and there's I think 10 or 11 additional trade setups that you can look for in the order flow and give you that for free. So that's almost $2,000 worth of software and training, right? So, what other people are saying is, the Orderflows Trader software is very helpful. They can see who's in control of the market, right? So it's time to think about your success, right? But you got to plan it to get there, okay? You're not going to get anywhere without planning it. So for a one-time payment of $749, you're going to get access to the software and all the training. There's no more fees you have to pay me. That's it, right? Some people like to charge you a recurring fee, $100, $200 a month, and then you can never cancel it. No, it's just a one-time payment, right? So you go to orderflows.com/oft3, and let's put the link in the box there for you guys. And it's just you go to this page, you scroll down this page right here, right? You just scroll down on the side, takes you down here. You click on that button. Now there's a bunch of videos and more charts you could look at to show you how to use the software. You just click on this button to buy now, right? It takes you to PayPal. I don't get your credit card information. I don't want it. It's all handled through PayPal. And that's it. Simple, right? Then within usually a couple hours, because things have to get processed and user IDs and logins and licenses have to be created. You'll get it in your email, right? The email that you use with PayPal. Now, for those that stuck around and want a copy of my book, just go to orderflows.com/book.html. You just got to enter your name, first name, last name, and the email. Click submit, and then it takes you directly to the page you can download it from. Okay, so the main point is you got to get started, right? We're a year from basically when the world locked down. You should ask yourself where you are now versus where you were a year ago. Are you where you want to be in terms of trading and being able to become a full-time trader, or even someone that's doing it part-time and is consistent, right? That's what you have to do, right? You got to take action. You got to act now. So anyway, Anna, I don't have time for questions, but if anybody's got a question, they can just shoot me an email. It's my contact's on my website. It's just mike@orderflows.com. But again, all the links are in the chat, for downloading the book. It's orderflows.com/book.html. And the software is just go to orderflows.com/oft3, OFT3, because it's the third version of the software, .html.
All right. Well, thanks everyone for being here today. Hopefully you can see the screen here today. Again, my name is Jason Love, and I'm with it says the Oil Trading Group here. We've actually just gone through a rebranding. We'll talk about a little bit of that here in just a couple of minutes. But let's go ahead and get started here this morning. I know I have 45 minutes, so I have some stuff I want to show you here. So again, just by way of quick introduction, again, my name is Jason Love, and I am the founder and lead trader here at now Trade with OTG, formerly the Oil Trading Group. That's a picture of me back in high school. I graduated from high school in Odessa, Texas in 1987. Right after graduation, I enlisted in the United States Navy, and that's a picture of me as a young guy, just right out of boot camp, fresh out of boot camp right there. I did hold a top secret security clearance while I was in the military, and I am a combat veteran of Operation Desert Storm. And then a few short 30 years later, there I am as an older guy, right? We just celebrated our 10-year anniversary. In fact, back in October of this year, we celebrated our 10-year anniversary as the Oil Trading Group. And like I said, we have gone through a rebranding. We'll talk some more about that here in just a couple of minutes. But again, we just went through our 10-year anniversary here at the Oil Trading Group. So again, what we're going to talk to you today about is our market maker levels. And so one of the things that we'll talk a little bit more about the origins here of the market maker levels and what they're all about and all those kinds of things. But really the bottom line question that everybody asks themselves when they come to something like this is what this guy is going to show me today, does it actually work? And so what I'm going to do is go through just kind of a process of just showing you from kind of an independent standpoint about does this work or not work? And it works for me, and I'm going to show you how we measure that success or whether or not it works for me. So there are several of you out here that may or may not be familiar with Top Step Trader. If you're not familiar with who Top Step Trader is a third-party company that provides funding for traders in the futures and Forex space. Basically, if you can pass their criteria or their tests, they will give you a funded account. And so what you see here on screen is back in 2018, Top Step Trader posted on their website the 1,020 traders that had passed the Top Step Trader Trading Combine to that point. If you notice there, I've highlighted in red, it says 15 was the fastest number of days, which is the minimum amount of time that you could go through step 1 and step 2, right, to become a funded trader at Top Step Trader. And so what you'll notice here is that it says 15 was the fastest number of days to fund it, and you'll notice there on the right, the screen, I did a webinar back in 2018 where we talked about how I went from basically zero to funded trader in the least amount of time possible, which was 15 days. I'm going to throw a link to the YouTube channel. You can watch that video if you're interested there on that channel. So again, that is something that we did. And again, we did that back in 2018. Also, I have taken a number of different trading combines in front of a live audience in our day trading chat room. And here is just a few of those that we've been able to do. Now, we don't pass every one that comes down the pipe, but we do pass more than our fair share of those that we do. And so this is just a list, a small list of the ones that we've actually done over the years. And the reason I show you this is there's a couple things that I want you to look at here. If you look down at the bottom where it says average winning trade, the average winning trade was $421. The average losing trade was $119. That gives you a 3.5 to 1 reward to risk ratio. Also, if you'll notice here, the average win duration is about 22 minutes. The average losing duration is about 4.5 to 5 minutes. And that's about a 4-to-1 holding on to winners longer than you are your losers, right? So you are essentially cutting your losing trades short and letting your winning trades run. And you have a high reward to risk ratio in terms of your actual reward to what you are risking. But that doesn't mean that you're not having losing days. And if you look through here, there's some losing days that go on here. Largest losing day here on this particular combine is 2,800. And you can see what these largest losing days here in this column were. I'm showing you this to tell you that we use these market maker levels that I'm going to show you in here today as the backbone of what we do. Now, these market maker levels are basically our proprietary support resistance ideas that we use on a day in and day out basis. All right, so I showed you those that were done back to 2018 and 2019. In October of 2020, we went through the process in front of the live trading audience again. And what you'll notice here is that this is a letter from Top Step Trader that says, congratulations on passing the trading combine and reaching the funded trading level. Now, again, if you're not familiar with Top Step Trader, they provide you with funding if you can pass their criteria, right? So it's kind of like an online interview process. You go through their simulator and you go through their simulator and you trade, and if you can pass their criteria, then you advance to the next step. If you pass that criteria, then they provide you with a funded account. Now, in this letter, you'll notice where it says at the bottom, it says pro account or funded account. Now, I'm not going to get into all the details here today, but what I would recommend if you are a person who is trading at Top Step Trader, I always recommend that you go to the pro account versus immediately to the funded account, because there's really two reasons. Really, reason number one is that if you pass that pro account, which is in the simulator, they're going to fund a real account for you for $5,000. Once they do that, you can take 100% of that out and you can go about your merry way. Also, it's also in that simulated account where you are going to get, if you know how the simulator can be, you can get positive fills. There's a little bit less pressure because you know it's in the simulator. You're not in a live market. Anyway, I recommend that you do that direction. It's a benefit to you. It's a benefit to them. And so that pro account that you see there in the next slide, in fact, I'll show it to you here. Well, the next slide after this one, actually. This was what we did to go from the 50K step 2 to the funded account. What you'll notice here is that we completed this on October 27th, right? And the days complete was 10 trading days. So we achieved the profit objective of $3,000, this green check here, right? In the least amount of time possible to go from step 2 to the funded account in 10 trading days, right? And so again, that is how that process worked here, right? And so again, coming down here, we went to the Top Step Trader funded account. This is the pro account versus the actual funded account, and this is how I just described it for you. Once your account in the pro account reaches $5,000, they take that money, that simulated money, and they put that into a live account for you. If you wanted to stop right then, and you wanted to take that money out, they would allow you to do that in that pro account. So again, for the purposes of doing this in front of the room, I opted in for that pro account. And this is the way that pro account ended up. The 50K pro account to the premium funded account, again, you had to hit the $5,000 profit objective. We did that in 4 trading days here, and the profit objective was $5,084 that we achieved in that small amount of time in that 4 days. So what I just showed you is in 10 days, we achieved the $3,000, and in 4 additional days, we went to and got to the $5,000. Now, we went into the premium funded account here, right? And says, congratulations, you earned that premium funded account. We're thrilled that you reached this milestone. And again, they transferred $5,000 into that premium funded account. In addition to that, on the side, around in that same kind of window, we did the $150,000 pro account. Now, the profit objective on that $150,000 account is $9,000. That's the profit objective that you need to achieve on that pro account. It's $9,000. You'll notice here that the high water mark And where we ended was 163,274. That's a profit of $13,274 in 5 trading days. Okay, in 5 trading days, using the levels that I'm going to show you here today. So we said, okay, we're going to take this from step 2 to the funded account to the pro account, right? So we went from step 1 to step 2, and this occurred on November 19th. We completed that in 10 trading days, and again, the profit objective of $9,000. We hit that high watermark and closed that account at 162,359, which is an additional $12,359 in a minimum amount of time to be able to achieve that, which is 10 trading days. Now, I'm going to show you again a couple of things here, but I want to show you this. We are just in the middle of doing it again. This is their website, Top Step Trader, right? We're in the middle of doing it again, and I've been in this combine for 2 days, okay? And in the live trade room, in the last 2 days, we are $9,000 profit objective. We just achieved it here. Right now, the current balance before today's trading was 163,289. That was before today's trading, right, in that account. And here is your Ninja Trader on the step 1. And I don't know if you can see this or not, but we are at present 164,883, right? So there is your step 1. This is live on their website as we speak here. This will be day 3 today, and we're at 164. What did I say? 164,883, right? And so again, it's not just in the past that we've done them. We are doing them live right now in front of our live day trading chat room. As we speak, moving through, again, a Top Step Trader account. The reason we do Top Step Trader accounts in our trade room is because, candidly, guys come to the table and they are underfunded. And this is a way that we can help traders become funded using the levels that we trade in here every single day. All right, so what I just showed you before I showed you the $13,000 or $14,000 that were up in the last 3 days here on the trading combine, I just showed you $36,902 in 2 Top Step Trader accounts that we went from step 1 to funded trading status in just over 1 calendar month. And I just passed through step 1. I got to wait 2 more days, and we'll go into step 2, and we'll do that process in our trade room as well. All right, so it's not just me that has been able to accomplish this, right? It's great, Jason, that you can do that, but can I do it? And so what I'm showing you here is Stephen G., who is a member in our trade room. If you look back here, this was back in November of 2020. He writes to me and says, look, thank you so much. I just registered for the room. See you in the trading room. By the way, and I'll read this here, by the way, I passed the first step on phase 1 with Top Step with your trading methodology during my free trial and over the past 4 days. If that wasn't worth every penny, I don't know what is. So Stephen came into our trade room, sat with us on a free trial for 4 days, and passed his step 1 with $6,196 on his free trial with us. So it wasn't just me that was able to do it. Stephen also did it while he was there on a free trial. All right, but it's not just Top Step Trader where we use this information, right? So I was approached, this again back in 2018, I was approached by what was at the time a new company called Earn to Trade. They're another funding company, and they said, look, we understand that you do these prop firm training stuff for people. We would like you to introduce your prop firm or our prop firm to your folks. And I said, sure, I can do that, but I got to make sure I can get through the process, then get to the funded status, and then have you pay me, right? And so what I did was that exact process with Earn to Trade. And I created a webinar that was called From Start to a $5,000 Deposit, My Experience with a Proprietary Trading Firm. This is Earn to Trade. All right, so I don't know if you can see this or not, but this is my, let me see if I can zoom in on this. This is my business banking account, and what you'll see right here is the deposit, the $5,000 Earn to Trade deposit that they made to me based on us passing their criteria with our trading methodology and the levels that I'm going to show you in here today. So in addition to that, I put the link to the YouTube channel in the main chat window here. but I'm going to show you this here. This is the YouTube channel, and I'm just going to kind of scroll through here, right? So these are just page after page of videos. By the way, this is that webinar, how I passed step 1 to step 2, right? And there's just literally page after page of videos that show you how we use these levels on an everyday basis. Now, I haven't had a chance to make videos in about a week and a half, 2 weeks, and I need to make some more. But there's an example here. Here's an $1,100 NQ trade. This was an 8.75 to 1 reward to risk NQ. Again, this is a market maker level webinar that we did. There's a $2,000 ES trade. Again, 6.7 to 1. And the way that I break these videos down is I kind of explain to you what we do. And then not only do I explain to you how it works, but then I show you the actual trade as we entered it live in the trading chat room, right? So this tells you where we got in, shows you that the P&L is on screen here, et cetera, et cetera. And this shows you exactly how we go about that process of doing it. So that's on the YouTube channel, that link to which is in the main chat window there for you as well. All right. So moving on here. Before we go any further, I need to tell you the government requires us to tell you a few things here, right? We all know that. The CFTC wants you to know that options and futures trading has large potential rewards, but also potential risk. You should seek appropriate investment advice from your broker or licensed investment advisor before taking any action. The oil trading group and now Trade with OTG does not hold itself out to be a commodity trading advisor. So given this representation, all information and material provided by us to you here today is for educational purposes only. It should not be considered specific investment advice. And then, of course, there is the hypothetical rule of simulated performance has limitations and does not always perform like you would see in a live marketplace. And again, if you want to visit the site, tradewithotg.com, you'll be able to get the full risk disclaimers that you see that will provide you with the full risk disclaimer, rather, as you move forward. All right, so let's get into the meat of what we're talking about here today. What is a market maker? So I call these market maker levels. In fact, the title of my presentation, the secret trading levels of a market maker. And the reason I call them secret trading levels, it's kind of a cheesy marketing thing, but the reason I don't like to do that very often, but the reason I do it here is because it actually is true. The guy that taught me these levels, and I'm going to show you a picture of him here in just a minute, Patrick, was very close to the vest when he first taught me how to do this, right? And before he actually started teaching me, he was really close to the vest with the information that he provided. And essentially it went like this. He was like, well, Jason, you know, I'm going to be looking to get long here and short here. And I said, okay, well, how did you derive at that level? How did you get there? And he goes, well, you know, I'm not, yeah, you know, and then he'd be really evasive about it. Right. And so it got to kind of this running joke where I would say, okay, well, where do the secret levels here today? Where do they tell us to trade? And we would laugh. And anyway, eventually, as he got further along into his on-screen trading, and then eventually he retired, he's taught me how to do these levels, right? And so I still look at it today as the secret levels because, again, like I said, he was super close to the vest about sharing the information. Anyway, what is a market maker, right? And again, these floor traders were actually making the market, right? So the market maker was a high volume trader that literally made a market by always standing at the ready to buy or sell. They would profit on the bid-ask spread, and they benefit the market by adding liquidity to the market. That's a picture of Patrick right there in the green jacket, very flamboyant pose, right? But there he is. Back in, God, I'm trying to decide what year this was. I think this was back in the early 90s. Anyway, Patrick, as a floor trader, fulfilled an important role in the commodity and stock markets by providing liquidity and narrowing the bid-ask spreads. Floor traders were also referred to as market makers, right? All right, so these levels were developed back in the 80s, and they were again developed by Patrick, the floor trading mentor of mine. In their original form, these levels were calculated by hand. Despite the changes in the way trading is conducted today electronically, the logic for the levels continue to work in today's trading environment. So what are market maker levels? Well, as you know, the market is continuously telling a story. The story provides the context for the daily trading session, right? So you hear people talk about what do the higher time frames look like, et cetera. Well, the reason we look at those higher time frames is because we're attempting to determine what the story is that the market's trying to tell us, right? And so again, these levels are the structure points inside of that daily story. So once you kind of have the big picture idea, then these levels provide you with the structure points inside of the day's story. Once determined, these structure points are used as tactical areas to make trading decisions, entries, stops, and target locations. So why these levels work, right? So I could flip you the keys to the car and you could turn on the ignition and you could put the car in drive and you could drive down the street without actually understanding the mechanics of the internal combustion engine. But I believe that it's important that you understand why these levels work, right? So these levels work because, as you know, the market does not move linearly in nature. The market will rally, it will pull back, and then it will pull back and rally. And statistics will show that the market will be non-trending greater than 80% of the time. So if you look at this profile chart here, you'll notice, you'll notice that the market started here and it sold off, and then it rallied and then it sold off, and then it rallied and it sold off, and then it rallied and it sold off. And you'll notice that there's about 3 weeks worth of data here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. They're about 20 days. So there's almost a month worth of trading days listed here. And there's zero trend that is going on here, right? There's no trend that's in this market in about one trading month. It's selling off, it's rallying. It's selling off, it's rallying, right? And so these levels work because they are measuring those rotations. So in order to fully understand why the market rotates, you must understand the auction process and how markets go about discovering what the fair prices are in any given day. So again, remember this. The market moves from horizontal development to vertical development, and then horizontal development, and so on and so forth as the markets continue to go, right? So Jim Dalton will tell you that it's a continuous two-way auction. The market rallies to find sellers, the market sells to find buyers, right? And these levels are part of that process, right? So the sole purpose of the market is price discovery. Rally to find sellers, sell to find buyers. The market will rotate within a range of prices until a variable changes. Variables change all the time, right? News, geopolitical situations, et cetera. But the market is going to rotate within those prices until you get a variable change. And once you do, then you go to vertical development, and then eventually it finds horizontal development. And that process continues all of the time. So these rotations create a set of measurements that are based upon time and price cycles from previous trading sessions. So what you see here on the right is a chart with a set of these levels actually on the chart. Now I'm going to show you some real-time charts here, and I'm going to show you a couple of trades that we took live in the day trading chat room this morning before I came here today. And I'm going to show you how these levels worked in the live market that we took this morning, less than an hour and a half ago, right? All right, so again, these measurements are then projected forward. So as the market rallies and pulls back and rallies, it creates a set of measurements. Those measurements are then projected forward as your structure points for the current trading day. So I get asked this question a lot. Well, Jason, it's a market maker level. He was a floor trader. Are these floor trader pivots? And the simple answer is no. Here's the difference between the floor trader pivots and our market maker levels, right? Both of these levels were developed and used by floor traders. However, there are some differences in how price is measured and how the levels are calculated, right? So floor trader pivots, for those of you that are unfamiliar, and for those of you that are familiar, this will be a refresher. There is a center line, right? There is a center point called the pivot point, and that level is derived by the high, low, and close from the prior day session, and divided by 3 gives you a price. And then the resistance above, the R1, R2, and R3, and the support below, the S1, S2, and S3, are a variable off of that number. right? Now, these measurements are basic in nature and do not take into consideration changes in market and price volatility or range expansion as it's occurring in real time. So what I mean by that is once you get past the R3 level on the day, there are no more support resistance levels to deal with. The market maker levels are based upon measurements which derive from time and price movement. And because of the time calculation involved, these levels evolve in real time to account for the changes in rotation and new price discovery. How many times have we been at the all-time high on the ES and NQ recently? A lot. And so there is no measurement at the top of that range. There is no previous price action at the top of that range, right? You can't say, well, I'm going to use this level here where price was rejected in the past as a resistance area because we're already at all-time highs. Now, you can use a tool like an Andrews pitchfork or some kind of Fibonacci time sequence to project out and forward. But again, those are not as reliable as what these levels that will show you the time and price intervals based on the market dynamics that are occurring. So this is going to give you good support resistance ideas into the future, even though we've been at all-time highs, right? And it is uncanny how these levels work when they get to some of those levels above. And I'm going to show you that here in just a second. So our final thoughts here. These levels will continue to work because trading is based upon human emotion and group think. These levels take advantage of the process of continuous price discovery and provide structure for the daily trading sessions. So in just a minute here, I'm going to go through some chart examples with you, and I'm going to show you a couple of trades here that we took in the live day trading chat room. But I'm going to show you, the levels I'm going to show you here today are going to be broken down into what we call ETH, or extended trading hours. That's the overnight session, and into the RTH, or the regular trading hours session. Now, again, ETH stands for extended trading hours, and that is your overnight trading session. These levels begin plotting at the close of the RTH session from the previous day and are valid until the close of the next day's RTH session, where the next set of levels will form. They provide structure points or support and resistance for the overnight trading session. The RTH levels form at what used to be known as the pit open and is now the RTH session. And these levels begin plotting at the open of the RTH and conclude at the close of the RTH. All right, so let's do what we all really want to do, is see what these charts look like in action here. Okay, so this is today on the NQ, right? And so you'll notice here that we finished the day up 1645 in our live day trading chat room. And as the market opens up, right, market opens up right on top of this RTH signal. So this this yellow line here. Let me do this. Let me take, no, I'm going to leave it on here. Okay, so let me explain what you're looking at here on the chart. First of all, this is the green line's a 20-period average. The purple line is the volume-weighted average price. And in this second panel is a cumulative delta, meaning that this is measuring the aggressive buying and selling pressure that is coming into the market, okay? Market opens up right on the RTH signal level here and rallies. And then it pulls back and stops just short here of the RTH signal. Now, I ended up getting in here on the break of the 20-period average, and we rode it all the way into this RTH target up above, right? And so if you take a look here and you measure this out, the entry here to here was 51.25 NQ points, right? So remember earlier I was telling you I had a 15-point stop. It is a 15-point stop. And actually on this one, I moved it up behind this signal level. But let's just assume for a minute that I have a 15-point stop. That is a 3-to-1 reward to risk ratio. It's actually a little bit greater than that. Remember, I just showed you a YouTube channel where I have over 500 trades here, video trades of us taking these type of reward to risk ratio type trades. So I'm going to show this to you again here really quickly, right? And if you come back here, right, these, again, there are over 500 pages or 500 pages. There's over 500 videos of us taking those high reward to risk ratio type trades. That's exactly what we did in our day trading chat room here today, as evidenced by the final total, which was 1645. So 2 lots, right? 2 lots on the NQ from the 20 period all the way up here. The market rallies through that area, can't get up into it, and then gives you a chance to get in short here at the RTH target. Now, I'm going to show you a couple of things here that I don't recommend doing, but I'm just going to show you the power of how these levels work, right? And so what I mean by that is there's not an indicator out there that I would say you take every signal regardless of what happens, right? That you don't take you would never just take every signal without some context in the market. But what I'm going to show you here today is just that idea, okay? So market opens up here, and let's say that you get, let's see if I can take this off here. Market opens up here on top of this RTH signal, and you take this long, and the market rallies for 47.5 points, but you're waiting for it to come into this area. Well, let's say it comes down and your stop is at break even here. Well, you don't get hit, and eventually it takes you all the way into the upper target there, which is 62 points. Now, let's say you closed and reversed right off of that level, okay? Let's say you closed and reversed here at 953, and you want to, this, by the way, this green box is what we call the zone of influence, and you put your stop just above that right here, okay? So that's 10.25 points. Market comes down, sells off here, right? And you get maybe stopped out here at break even here, right? Because this is a big enough move to get your stop to break even. That is that's 20 points, right? So that is enough to get to break even. Then the market rallies back up, pulls back into here, and you said that I'm going to look to get long there, and you end up taking a stop, okay? Let's say you end up taking a stop there. That's 11 points. So you have one winner for 63 points, and you have one loser for 11 points. That's 52 points. That is a 6-to-1 reward to risk ratio, right? That's a 6-to-1 reward to risk ratio, and that would have been your only opportunities today on the NQ. Now, looking back here into yesterday, pretty choppy trading conditions, but one thing I want you to notice is you never really ever closed above the zone of influence here on this level up at the RTH signal, and the market, let's say you were here, it never closed above that level, and then you just said, I'm going to take this down as deep as I can get it, and let's go here, right? So, by the way, you'll notice that you ran out of levels here, and so what I would do in this instance is I would turn on the overnight structure points here, and look where we ran into, right? Look what we ran into. Bounced back up to the 20 period, back to the level, bounced back to the level. These are your overnight levels. Look here, we took this trade in the day trading chat room as well. This is right to your ETH signal point. Market sells off, pulls back into the developing value area, and then it goes down to the level below, right? And this happens every single day in our markets. If you look at the overnight structure points here today, look at where we stopped. Right, so if I were to turn off all of the drawing tools here, let's go here to, let's see, remove drawing objects, remove them, yes. Okay, so in your overnight session, this was the overnight session. Let's say you like to trade the overnight. You came down into the ETH signal, rallied up into the ETH mid, pulled back a little bit, rallied all the way up to the ETH signal, pulled back a little bit here, and what you have now is a series of higher highs and higher lows, and you would be looking to reach out on the NQ into this upper target boundary here today with support at the volume weighted average price. Very good trending day here on the NQ, being supported by the volume weighted average price and your levels giving you targets. If you were in the overnight session, right here at the ETH signal, and you wrote it to the signal here, that is, gosh, that's the wrong tool here. Hang on a second. And this is the NQ, and I'm going to show you the CL and the other instruments here in just a second. So we're going to go here to ruler, and you go from signal to signal, right? That is 207.5 NQ points, right? And so at at $10 a point, sorry, at $5, $20 a point times 207, that's $4,100 worth of movement right there on the NQ. All right. And so again, that's your levels working here on an everyday kind of basis, just looking at today's real time in the market kind of idea. Let's take a look here at the ES today. This is what the ES look like. Okay, and I'll turn this off here. So market opens up just on the other side here of the RTH signal and ran all the way to the RTH target. Now this came from the RTH signal down to here, which is that is 2.5 points. I like a 3-point stop here. So really rotated 2.5 point on the ES, and then went from here to the level above, which is 10.75 points, right? Almost 11 points. So that's a 3.5 to 1 reward to risk ratio. Remember what I showed you earlier here as we were going through this. Remember that I showed you that I have a 3.5 to 1 on average reward to risk ratio. Here's how that works with these levels, right? So the market pulls up through this structure point, now has come back up and is over the top here of the RTH target. You would be looking to get long here, and that's 10.75. That's almost 11 points would be your target up here if you were looking to do in that way. Now, you wouldn't be really looking at shorts because the market is above the developing value area. It's above the 20 and it's above that volume weighted average price. And that gives you some very clear structure points here as well. But let's take a look at what the overnight levels look like. And this is what your overnight structure points look like. So the market comes in to the zone of influence. I don't have it turned on here, but we have what we call the zone of influence. The market's just getting started, sells off, couldn't make it to the level below, and then gives you the opportunity here, rallies, pulls back into your ETH mid. We are trading, again, the context that we talked about this morning. The market was 100% above settlement in the overnight session and really never looked back for 25.25 ES points, right? You went from level to level, a little bit of a pullback to level, small, shallow pullback, and now you're rallying again, and your expectation is that you would come up to this ETH upper target 1, right? So that's what it looked like on the ES here today. And let's take a look at the CL really quickly. This is what it looks like here on the CL. So I'm going to take this off for a second, okay? And you notice on the CL today, you opened up right above the RTH structure point here. Market opens up, comes right down into that RTH signal structure point, and immediately rallies up to the RTH signal on the other side, basically like steps on a ladder, goes all the way up to that market, and that's 77 CL ticks. Market pulls back down into the RTH mid, doesn't really, I mean, that did close below, technically, yes, but really didn't get through and close below the volume weighted average price. And here we are moving back again, and you would be looking at that level for 37 ticks as a possible target. Or as you go into the close on the day, I'd really be looking at this RTH upper boundary target as a potential opportunity. So I'm going to do this here. Yeah, I was going to say, well, I'm going to leave that as it is. Let's go back and do a couple of more days here backwards. All right, so here is yesterday. Actually, this is yesterday's activity on the CL. And again, market blows through the RTH signal on the initial impulse open here on this day. And so you might have been stopped out here, but you get this opportunity, right? So let's say you were short here, and I like a 10 or 11 to 12 tick stop on the CL. And so again, let's say you took this short here, right? You would have been stopped out at, let's see, that is 20. You would have been stopped out at 32. That's 11, 12 ticks. Market comes into this level above, pulls right back down into the zone, right? Closes, and then you're in, right? And so now let's do this. Let's turn on the overnight structure points. Well, that is going to, all those levels are going to be gone. So you need to turn on your intraday real-time levels, right? So these are updating in real time as the market is expanding, right? And so again, you'll notice how as the market expanded, it went into these different levels here, right? All the way up through it on that particular day, right? So this gives you a good example of what happens when the market is expanding. I think we had a 200, almost 300 tick range yesterday on the CL. And so the market continues its rally up through it here. So I'm just looking here at the clock. We got about 3 minutes left here before my time is up. So I'm going to do this here for you. We're going to suspend that. I'm going to ask if you have any questions. And while I'm doing that, I'm going to make you the offer. It's a real simple offer in here today. I'm going to offer you the ability to come in and take a 3-day free trial with us here, right? And I'm going to throw this link into the mix here. So no obligation, no credit card, nothing like that. Just a simple 3-day trial. By the way, we did update the website from Oil Trading Group to now Trade with OTG, right? And so the new site looks like this. So this is what the new site looks like. You can sign up for the free trial here as well, and you can kind of peruse the information here as we go through it. But all I want you to do is come in and take a free trial with us and see what these levels look like in real time, in real action with this. You can start your free trial tomorrow. You can wait till Monday, whichever you want to do. But just go ahead and register for that free trial. Come in and join us, right? Come in and take a look and join us here for that free trial. So I got about a minute and a half here left. And so does anyone have any questions before I close this up for the day? And I don't know that we will have any questions here. I don't see much in the way of questions coming in. But again, I do invite you to come in and take a free trial with us here. All right, very good. Yes, we do trade this every day, Monday through Friday. We start at 8:15 a.m. Central Time on a everyday basis, and we trade NQ, ES, and CL. Right now, the NQ has been the most active market, so we're trading a lot of NQ at the moment, but we will trade both the ES and CL as well. We took an ES trade here today for 2 points. It wasn't until after I got out that the market kind of exploded up here. So, all right, very good. Well, I appreciate your time here today. Invite you to come in and register for a free trial. We've got a number of you that are registering now for the free trial. We appreciate that.
Dow 40,000, here we come. Goldilocks is back. It doesn't get any more clear than that. Let's see if I can get through a 1-hour presentation in 45 minutes. Take out your pen and paper to take notes or start typing into your smartphone. What I'm about to tell you will blow you away, change your life, or I am in the investment epiphany business. And there's me getting my COVID-19 shot, so I am going to live forever. And fortunately, it was a Pfizer shot, not an AstraZeneca or a Johnson & Johnson. Why listen to me? Well, I have 50 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo and later the White House, 10 years running the international equity division at Morgan Stanley, little time out as a Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, and 5 years fracking for natural gas in Texas. And now 14 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of people from the modern hedge fund industry who is still working. This is the reason to listen to me. In January, we were posting a 72% trailing 1-year return. Thanks to some prescient market calls, that went up to 93% in March, and we are now up to 128% as of April 14th. So not only do we have the best performance in the hedge fund industry, it is improving at an exponential rate, and that's versus an S&P 500 of only 47%, 48%. If you're going to spend 45 minutes with me, you better get to know me. My family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California, I lived the all-American lifestyle, playing Little League Baseball and becoming an Eagle Scout. Wasn't much to do in the old days except hunting, so I picked up a job as a paperboy for the Los Angeles Herald-Examiner. One of the first papers I delivered covered the Kennedy assassination in 1963. Wasn't long before I found the stock pages, bought IBM at 20, sold it at 30, suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I'd visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. There, yield didn't mean interest paid, but millions of Russians killed. I didn't see a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions, where I learned how to fly and jump out of perfectly good airplanes. I became a foreign correspondent for The Economist magazine. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. Of course, in those days, doing research meant carrying a 45 caliber Sten gun that used to jam on every 6th shot. At the end of 10 years of government service, I ended up with this box of medals, which I drag out once a year on Veterans Day, which is coming up. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry joining Morgan Stanley. After 10 years, I started my own hedge fund, and that's my Morgan Stanley ID card from 1983, and yes, the years have been tough. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Actually ranked 2nd place in the annual hedge fund competitions. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to do things like fly your own private plane around Europe, buy the latest hot car, go marlin fishing in Mexico, and collect vintage Rolls Royces. I sold my hedge fund in 2000 and retired to go into the oil and gas industry. After making a killing there, I missed the stock market, so I started the Diary of a Mad Hedge Fund Trader in 2008. I now spend my days pursuing my first love, finding winning trade alerts, but now I do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account and turn it into $500,000, that is more job satisfaction than I could get anywhere. However, every silver lining has a cloud. This is my 2019 tax return. It shows I had to pay $5.7 million in taxes on $15.5 million in trading profits, and this year looks like it'll be even better. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it is probably me. As a Marine Corps veteran, I volunteer for grief counseling and for widows and orphans, and I'm a major donor to wounded warriors. When wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. There is a method to my madness. 2021 could be the best year of the decade for stocks, with Dow 40,000 within reach, up 35% on the year. A perfect storm of positive economic conditions will trigger a massive increase in stocks, earnings, and prices. 2020 was only a short-term dip in a 20-year bull market that may have another decade to run. Most pandemic business activity was lost, just deferred into this year, leading to an explosion in spending. Many domestic recovery stocks have barely moved in a decade and now have enormous upside potential. Reopening stocks like Disney, Boeing, and United Airlines, hotels, cruise lines have already had a huge move, but still have much to run. 2021 will be a year to be fully invested and 100% risk on. Don't use last year's playbook. New sectors will take the lead in 2021. If you're wondering why I was in such a good mood in that last picture, it's because I was flying a P-51 Mustang. And if you don't know what that is, this is my friend Geraldine, based in Southern Florida, which I get around to flying around once a year. Corona update, the end of the pandemic is here. Massive distribution effort has been hugely successful. 48% of the US population has been vaccinated, or about 5 million people a day, and 12 to 16-year-old will soon qualify for the Pfizer vaccine. New cases have fallen off a cliff from 250,000 a day to 35,000, down 86%. Populations acting like herd immunity has already begun. In a year, everyone will be either vaccinated, have had the disease, or will be dead. Every pandemic parameter started shrinking dramatically on January 20th. At least 50 variants are now in circulation, with the most contagious and fatal ones now dominant. We may hit a vaccine glut by May, so watch out for Pfizer, Johnson & Johnson, and Moderna. Glut won't be good for share prices. U.S. cases have topped 31 million, and deaths are topping 564,000 and are now under 1,000 a day. This is the new cases. They've fallen off the cliff and should be at zero by the summer. This is the map of infections as of January 20th, and you can see we have massive infections right along the Texas border and throughout the South. This is that map today. Few red spots along the border still, a few more in the South, but basically half the country has no COVID at all right now. Stocks, tech has come back from the dead. More money is poured into stocks over the past 5 years, some 565 months, some 565 billion than in the previous 12 years, and the best is yet to come. Tech has come back from the dead, ending an 8-month correction. New highs are within range from here. Bond rally and falling interest rates bring a tech rally that could last till year end. Cash is still pouring off the sidelines. 1.9 trillion rescue package plus a 2.3 trillion infrastructure deal is the same as pouring gasoline on the economy. At least another 20% in stock gains are left for 21. S&P 500, 4,800, here we come. Stick with the barbell strategy. We'll keep rotating back and forth all year between tech and domestic recovery stocks. Cash is trash and will remain so for years. Here is the S&P 500, and this is the major support level that our algorithms have generated internally, and our forecast is choppy new highs from here. This is the barbell portfolio. You put half your money in big tech and half in domestic recovery stocks, including railroads, couriers, banks, construction, credit cards, hotels, and online ticket sales. Why so much in big tech? Well, you have 2% of the US workforce, generating 27% of the market capitalization and an incredible 38% of all US earnings. So you can't invest without tech. Here's another reason we're targeting 18,000 in the NASDAQ this year. That's up from 13.8. So we still have a lot to go. These blue boxes are buy and sell signals issued by our internal algorithm, which I'll talk about in a second, but we had buys here, here, a sell here, and then we got back in on the long side here. Microsoft, one of our favorite stocks, we're targeting $300 this year. And again, you can see the buy signals in the blue boxes. Apple, another favorite. There's a major generational upgrade going on in Apple. 1 billion phones need replacement so they can use 5G. And of course, Apple has 250 billion in cash. So they're the largest buyer of their own stock in addition to Warren Buffett. So keep buying Apple on the dips. We bought back here, here, got out in February, and then got back in March. Amazon, they're going to become the world's first $3 trillion company. They hired 500,000 people last year, bringing their total workforce to 1.2 million. Just about to have a major breakout here, and we're looking for $5,000 by the end of the year. PayPal, of course, touchless payments are the future. Turns out you can get the virus from handling cash. And of course, any digitization of the economy moves more business to PayPal, and they're now clearing transactions in Bitcoin. So they become a Bitcoin play. Salesforce, a major customer relationship management stock. This is how large companies are moving their business entirely on the cloud. It's the only one in the world that's growing exponentially. We did get a slowdown in the stock from their $27 billion takeover of Slack, but that gave us a great entry point, and we're targeting $400 a share this year for Salesforce. Second half of the barbell bets on a massive global recovery in 2021. Upside potential for stocks in 2021 is far greater than tech. Some of these have not moved for 5 or 10 years. Focuses on economically sensitive cyclical industries, makes a great counterweight to a high growth technology. We could spend all the next 2 years rotating back and forth between these two groups. Boeing, of course, is the ultimate cyclical recovery stock. It's already moved from 95 to 250. We still have buy signals coming out on this every couple of months, and we're targeting $300 in Boeing. You know, China returns as a major buyer of planes after the Trump trade wars end, and now U.S. airlines are suffering from a major aircraft shortage after canceling all their orders last year. JP Morgan is the quality value play. Banks love rising interest rates, and falling default rates are hugely overcapitalized, and they also are moving into online banking and closing their hugely expensive branch networks to cut costs. We've been in this for the last 6 months since the election and have gotten nearly a double on the stock. We got buy signals here, here, and another one right here. Credit cards, another touchless payment plan. Any digitization of the economy moves more business into online credit card usage. And I bet you didn't know that 15% of all credit card charges were for travel charges. And that is where about half of all the stimulus spending is going in our $1,400 checks, is people are planning summer vacations. So we're about to see one of the great travel booms of all time. Railroads, if you have an economic recovery, you have to move around a lot of stuff. And that means moving stuff from east to west, west to east, for increased trade with China, and also north to south, doing more trade with Mexico. It's not your father's railroad, it's basically now a high-tech company. Retailers, I bet you're sick of sitting around in your pajamas all day. You might even go out and buy some new clothes. So retailers are going to do really well in this situation. Kohl's has the strongest balance sheet. It's one of the ones that did quite well last year, and we're looking to buy this one on dips. We're targeting $100 a share for Kohl's. FedEx, another way of moving stuff around overnight in an economic recovery, is FedEx. FedEx and UPS are both classic cyclical recovery plays. Also, they're delivering all of our COVID-19 vaccines because they have to get there in a hurry. So that's another 1 billion doses that have to be moved while kept at 74 degrees below zero. It's hugely profitable business for FedEx. Caterpillar just is seeing a perfect storm, recovery in agriculture, infrastructure, housing, and China business all means good business for Caterpillar. We're targeting $300 a share in Caterpillar. Of course, in any economic recovery, small shares do better than large shares, so they have been outperforming the S&P 500 for the last 6 months. These are much more leveraged companies with more debt and less stable businesses, therefore do better on economic turnarounds. We're targeting 250 in the IWM ETF. Berkshire Hathaway is essentially the one-stop barbell because it has major holdings in banks, but is also the largest outside shareholder in Apple. So we've already gone to new highs since I put out this chart. Keep buying on the dips. You want to put your money with Warren Buffett. Bonds are crashing and will continue to crash, and we actually have a 2.5-point rally today, which is the perfect place to sell into. Quantitative easing will continue, says Fed Governor Jay Powell, even if the economy improves. The $120 billion a month in bond buying remains. Fed is doing everything possible to create inflation, but they're failing. TLT hit a new low with yields at 176. I'm piling into financials, which love higher interest rates and are an indirect bond short. All the big banks just announced record earnings off the back of huge stock trading profits, so you want to buy all the financials on dips. 2% yield on the 10-year Treasury will happen sometime this year. This is the quality trade of 2021. U.S. Treasury bond fund, the TLT, could plunge from 180 a year ago to 105 next year, making it one of the greatest shorts in history. Here's the TLT, and you can see just since the beginning of the year, we've fallen from 160 all the way down to 132. We're back up to 140 right now. We're eventually targeting 120 on the TLT. Sell short the TLT. Here's the yield. We topped at 176. We're now down to 157. The long-term trend is still up, targeting 2%. Foreign currencies, expect the dollar to keep getting black eyes. Massive U.S. government borrowing is debasing the dollar at an epic rate. Australian dollar has sold from 58 to 79 in 11 months. We could hit parity by 2022. That's 1-to-1 on the US dollar and the Australian dollar. Jay Powell says no rate rise for 3 years, prompting a dollar dive and strong foreign currencies. Any dollar rallies are temporary and short term, with equity soaking up the world's cash. Trading volume and volatility is falling in the Forex markets. Bitcoin hit a new all-time high at 64,000 on the Coinbase IPO yesterday. That could be the top for the short term. Keep selling short all US dollar rallies. Its yield support is gone forever. There's the UUP, a US dollar basket, and we've been selling all year. We sold back up here, sold here again, and we're looking for new lows in the dollar. Here is a 10-year chart for the Australian dollar. You can see we had a fantastic capitulation sell-off last year on the pandemic. And then the Australian dollar is basically a call option on a global synchronized recovery. That's what you want to own during a global synchronized recovery. So we've made it up to 79. We're looking for 1-to-1 on the long-term charts. Bitcoin gone ballistic, but could be topping out around here. Energy is going out of business. End of oil is upon us, but it may take 20 years to unwind the existing infrastructure. All U.S. car production will be electric by 2035, wiping out half of all U.S. oil consumption. Hugely anti-oil administration will do what it can to accelerate the process with aggressive and alternative energy subsidies, aggressive taxes and alternative energy subsidies. Oil consumption will become a China play only, with China already taking up 80% of all Persian Gulf output. That means we don't need to defend the Middle East anymore, which is probably why Biden is pulling the U.S. out of Afghanistan. Biden bombing of Iran delays return of their oil to the market, avoid all energy plays like the plague. It's the new buggy whip industry as the U.S. decarbonizes. Here is the recent top in oil prices here. We're looking for $10 a barrel on the next economic downturn. So sell rallies in oil. Here is the 20-year trend. It shows we've actually been in a bear market for oil for 13 years. We peaked here in 2008, got another lower peak here, a lower peak here, and of course, new lows across the board. So again, targeting 10, and if I'm wrong, it's because we go to negative 10 or negative 37, which is where we got to in the futures market a year ago. Precious metals are having a meltdown. Sharply rising interest rates remain a threat to precious metals. No one believes we've come close to peaking in interest rates. Gold has turned into the worst trade of 2021. They are struggling to make a new bottom around here. It has turned into a bond long and a Bitcoin short, and I don't want either of those. Silver is a much better play on the expected production of 500,000 solar panels this year and soaring electric vehicle demand. Gold will eventually recover when U.S. borrowing becomes so massive it undermines the value of the U.S. dollar, scaring away all the foreign buyers, even in the face of higher interest rates. And that's me at the Istanbul gold market a couple years ago doing a little bit of Christmas shopping. Here's gold struggling to make a low here. I think we'll get a capitulation low sometime in the near future. After that, we're going to target $3,000 an ounce. Barrick Gold is the world's biggest gold miner. Something here you want to buy on the next major sell-off. We expect to hit $50 in Barrick by 2023. And of course, silver will do even better. It always does. And after the next capitulation sell-off, we're targeting $50 by 2023. We're at about $23 right now. There is another alternative investment opportunity. The next trillion-dollar company will be Tesla. Battery costs have dropped by 80% over the last 10 years and will fall by another 80 over the next 10 or the next 2 years if solid-state batteries can be mass-produced. Factories in Shanghai, Austin, Texas, and Berlin, Germany are the beginning of a global network of 100 factories around the world that will eventually make 25 million cars a year against 500,000 last year. What people don't get is that the data collection is worth more than a car. Full autonomous driving alone is an $8,000 per car upgrade. U.S. electric car sales have risen from 0% 10 years ago to 4% of the market today and will soar to 100% in 20 years. Tesla's already outselling all premium car brands in the U.S. combined, including Mercedes, BMW, Audi, and Jaguar, and they have a 10-year head start on the technology, which is increasing. Many countries and states have banned internal combustion engines by 2030 or 2040. They're already the world's largest car company, and the shares could eventually grow 12-fold from here to $10,000 a share. Here is a design of the solid-state battery, which will improve densities by 20 times. Your 1,200-pound battery now will become a 60-pound battery, but still get you a 500-mile range. Of course, Tesla's been one of our best stocks ever. We bought it initially at $3.30 after the IPO blew up. After that, it went up 295 times. We're now targeting another 12-fold increase to $10,000 a share. This is my latest Tesla, the 162,000 fully tricked out with ludicrous mode. I can only tell you that you better carry airsick bags because when you go from 0 to 60 in 2.9 seconds, your passengers tend to get airsick. This is my first Tesla, chassis number 125 off the assembly line. Even the best design in the world won't protect you from a drunk driver on Christmas Eve. A lot of people talk about Tesla. Very few have taken them to pieces, as I did, just to see what made it tick. Here you can see the 1,100-pound battery under the back seat and the carbon fiber wheel wells, which make it the safest car in the world. Don't play with matches. You can probably do okay just buying all the stocks I mentioned above and forgetting about them. However, the reality is that conditions for these companies change every day. They are all viciously competing, trying to put each other out of business. If you don't get daily updates on fundamentals, you could easily get wiped out. Today's big winner could easily become tomorrow's loser. That's why you need somebody like me to guide you through the thicket to avoid an out-of-the-blue blow-up. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income, go from complete beginner to seasoned pro in weeks, learn how to quit your day job and trade full-time for a living, trade from anywhere, anytime, supplement your retirement income with the satisfaction of booking winning trades by the hundreds. Harsh truth is you really need my help. Majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that is to get educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why is that? Dead people never sell. Not a bad thing in a 20-year bull market. You need a real pro to guide you through the market maze. The market is not monolithic. 95% of it can be completely ignored. There are a few great sectors, a lot of awful ones. You can earn a 10 times return on the great ones, get wiped out by the losers. Let a 50-year veteran like me steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. This is our secret weapon, our Mad Hedge Market Timing Index. It took mathematicians 1,000 hours of calculations to come up with this algorithm. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than a human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. I'm not the only one using algorithms. I was on the Miami waterfront a couple years ago and found this mega yacht, and look what it's called, algorithm. Some 80 to 90% of all current trading is algorithm driven. This is 3 years of profit predictor performance. You can see we get lots of buys every year, lots of sells, enough to make several round trips a year. It's like owning a printing press for $100 bills. This is the Mad Hedge performance over the last 13 years, and we have averaged a 41.68% return with only 25% of the volatility. That's 2 times the S&P 500. Now you can see last year our maximum drawdown during the crash was only 12%. For the index as a whole, it was over 40%. Bill was a struggling tobacco farmer in Virginia who wanted to supplement his fading agricultural income. After making $3.4 million with me, he still farms, but now he's growing grapes in California's Napa Valley for the high-end wineries. Philip was tired of working in the boom and bust of the oil and gas industry in Texas. After doubling his money every year for several years, he now earns a generous living as a full-time trader. And Jackie was an Australian hospital administrator who turned $50,000 into $2 million with my help. She's now a major player in technology stocks and lives a life of leisure. So what do we do about all this? Stocks, you want to buy the next dip. Bonds, sell rallies. Commodities, buy dips. Energy, stand aside. Currency, sell US dollar rallies. Precious metals, buy dips. If you're not up 128.94% in the past 12 months as I was, you were reading the wrong newsletter or following the wrong trade mentoring service. 128% in 12 months. You get that kind of performance, you get to do things other people don't get to do, like take the owner's suite on the Queen Mary from New York to England. When you get to England, you can take the Orient Express from London to Venice, and once there, you can go island hopping on helicopters. The very long view is that the 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be an easy one as global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that will last another decade starting in 2021. And if you think I'm crazy, this is what the Dow did from 1982 to 2000, up 20 times in 18 years. If I'm right, and 2009 was the bottom of another 20-year bull market, that means we're going to hit Dow 120,000 by 2027. If you think I'm crazy, we're already halfway there. This is where we are relative to the 82 to 2000 rally. Except this time it's different. Now we have a tech turbocharger. Technology is hyper accelerating on all fronts simultaneously. The development of quantum computers means that computer ability is about to increase 1 trillion-fold at no cost. All major human diseases will be cured. Needless to say, tech and biotech stocks dominate in this scenario. So sit with me, John Thomas, from my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 128.95%. We trade global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical month. We had 10 out of 11 trades make money. Bought the S&P 500, made 16.3%, sold treasuries, sold Russells, bought Amazon, bought Apple, bought Biogen, and then stopped out of it quickly. We stop out of all of our losers almost immediately because we know 95% of the time the next trade is a winner. Just a matter of time for tech and biotech stocks break out to new all-time highs. Watch this space melt up going into the end of 2021. Here's how it works. Last June, our algorithm predicted a major breakout in Tesla stock. So we sent out a trade alert. We said buy Tesla at 2 or best. And on this trade, you needed to spend $10,000 to get 49 shares. What happened? Tesla went up 63% in 20 trading days. So our algorithm started flashing a sell signal because it was overbought. It looked like this. We sold Tesla at $349. And on this particular trade, we made a profit of $7,203 in 20 days on a $10,000 investment. After that, we kept buying every dip in Tesla. It went up another 339% and was our big winner for 2020. In fact, we had quite a few stocks go up 10 times in 2020. This is our Hall of Fame. We had Zoom go up 10 times from the initial cost. We had Lam Research, a maker of computer makers, go up 10.6 times in front of a looming global chip shortage. Moderna we bought before the pandemic because we thought their virus vaccine could be used to cure cancer. Instead, it cured COVID-19. How about that? That stock went up 12 times. NVIDIA is just breaking out to new highs now. That is the high-end graphics card for PCs, artificial intelligence, and Bitcoin mining, up 16 times. Square went up 25 times from our entry point. Turns out in the pandemic, touchless payments rule. And of course, Tesla, the granddaddy of them all, in at $3.30. It went to $9.04. That's up 295 times off the back of global EV dominance, autonomous driving, solar panels, dominance of the power grid, and their satellite Wi-Fi network. Buy before 20 trillion hits the market. That is how much money is going to hit the U.S. economy. It's equivalent to the entire GDP of the country is going to get spent in the next 2 years. Most of this money has already been authorized. but hasn't been spent yet. And we just got an inkling of the impact on the economic numbers. You know, weekly jobless claims down 200,000 today, retail spending up 9.8% on the month. So with my global trading dispatch service, you get instant trade alerts sent out at market sweet spots, live biweekly strategy webinars like this one, special reports on urgent investment topics, invitations to strategy luncheons around the world when it opens up, educational videos and webinars, and access to a 13-year database. I'll even give you the name of a surfing school in North Africa with a seniors division. Warning, it's a lot harder than it looks. This is the one-stop shop for individuals who want to understand what is happening to their retirement funds, for people who want to learn how to trade for a living, smaller institutions and financial advisors who can't afford an in-house strategist. Get in while the melt up in the market is on. This is what you get with our service. You get a daily research newsletter showing all the long-term trends in the market. You also get the daily hot tips, the 5 most important things that happen in the market and what to do about them. You also get my 2021 annual asset class review, a forecast of all asset classes. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $15,000. That's what I charge my concierge clients who get my personal cell phone number so I can be their investment 911. And I'm not going to charge you $10,000. That's the full price of what I'm offering you on my website. This is the real deal, not for you. Creating this product cost me millions of dollars with the best customer service in the industry. Running it costs me millions more, and I am happy to spend it because I love what I do. This is the offer you can't refuse. 6 months for just $997. That is a 66% discount to the full website price. Just click on the chat box on the right, and you should see a link there that will take you to a dedicated sales page that you can only access today, right now. This is a limited time offer. We only take 25 new subscribers at a time, so it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right, and I see the orders are already starting to come in. Okay, let me take a look. Bill from San Diego, thank you very much for joining us. Promise to work hard to earn your money. And we have Mary from Chicago just signed up. Mary, thank you very much for joining us. You should get a trade alert in your inbox shortly. Let me make the money for you to pay for your subscription. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right. Here's the offer you can't refuse, just 6 months for just $997. Buy now and you will instantly receive a trade alert with an extremely high probability of success that you can execute immediately in the market right now because the markets are open, and make some of the most serious money in your life. Don't leave good money on the table. Some 95% of these trade alerts make money. And to give you a little teaser, this is the chart of the trade alert you are about to get if you subscribe to my service right now. What I won't tell you is whether that's a buy or a sell. You have to buy the service to find that one out. So 6 months for just $997. Click on the chat box on the right. And let me check my inbox here, see who else has come in. Okay, I can see we have just about run out of our 25 quota for this webinar. We have Jose from Miami Beach, Florida. Thank you very much, Jose. You check your inbox. The trade alert should be there. If it's not there, check your spam box. and execute that right now, because we have an incredibly easy entry point for this trade alert right now, this second. This is probably the best time trade alert I've ever sent out for new subscribers. Okay, we have John in Seattle, Washington just came in. Thank you very much, John. Look forward to working with you. And we've just had a whole bunch of new emails come in. We have Raul, I hope I'm pronouncing your name right, from Charleston, South Carolina. Welcome to the club, Charles. We have Lenny from New York City. Is now in. Thank you very much, Lenny. Look forward to working with you. And let's see who else we have here. We have Billy from Houston, Texas. Must work in the oil industry, Billy. Yeah, my comments on the oil industry are somewhat provocative in Texas, but all the smart money there is already moving out of traditional oil. Okay, we have another one here from, from David in Boston, Massachusetts. David, you're right next to some of my favorite biotech companies out there. Look forward to working with you. Let's see, do we have any questions here? Let me take a look. Let's see, we lost our slideshow. Click on the chat box on the right. If for some reason you can't access it, just cut and paste or type this into your browser, https://www.madhedgefundtrader.com/INVEXP as in Investors Expo. So let's see if I can get a question box up here. And yikes, hundreds of questions. Okay, someone says they're not seeing the sign up link, and someone just sent it to you. I assume that's Anna. Okay. We do have live customer support. The telephone number is posted on the website. And this is Aggie member. I know Aggie's well because my sister went there, Texas A&M. Please email or call customer service. We'll answer any questions you have about any of our trade alerts anytime. Let's see. Here's another Aggie member. Love the presentation. Thank you very much. Tapas is asking, what would be the cost after our initial subscription? Answer, you're grandfathered for life at this price. That's important because we keep raising our prices because guess what? Performance drives higher performance. Okay, other questions here. Thoughts on Bitcoin? We don't cover Bitcoin because I don't think it's a Ponzi scheme. As for interest rates, they go a lot higher. Basically, interest rates are going to keep rising for the next 8 years. That makes the bond market one of the greatest shorts in market history.
Today, we're going to focus on timeless day trading. Yeah, so it's not a play on words. I show you how we can take time out of the cohesion and make you a different trader. My focus today is that. I show you a little agenda. So let's dive into it. You see here a little diagram with 3 dimensions of how to look at a chart through volume, through price or volatility. That's what we have, and I'll show you what we can make out of this for making you a different trader. Before I go there, here is my little risk disclaimer, and that I'm here as a trader and educator, not as a broker, dealer, or financial advisor. So never loss trading. Sometimes people say, look, you lose some trades, definitely. It's an algorithmic program, but on swing trades, on longer term investments, we repair the trades, and never stop loss trading was a bit lengthy. So we never lose a trade, but we have a high percentage of winners, and I invite you into that. So the agenda for today's presentation is We look at the concept of timeless day trading. That's the key focus, but I'll show you some more. Yeah. We look at swing trading examples too. And first I focus a little more for the serious traders who trade with a little bit a bigger account. And we work through probability thinking, but I also have an offer for lower budget entry level, and always with our programs you can increase later to the next one within having the tuition accounted that you already paid. And I talk about payback period because for every investment it's important how fast can you have your money back, and then kind of try for infinite returns because you know your investment is back, but you keep the knowledge and you keep the concept. And that's what I'm going to show you today. Yeah, because in day trading, it's a wonderful strategy for risk limiting what you do. Risk limiting because you're not taking the risk of an overnight gap. And I'm going to work with you today here on defined entries, defined exits, and defined stops. The system generates those for you. Our algos work, they paint them on a chart, and I have multiple examples right as I was waiting and hearing the other presenter doing something. I also had a trade going, I share that with you. That's a frightening fact. 76% of the frequent traders lose money. Why? I'll come to that. Because trading has a big complexity. If trading was easy, nobody would ever go to work. Yeah, there's 5 dimensions of decision making. Yeah, to decide when do I enter under which conditions, what's my target, what's my stop, how much time do I allocate to the trade, and risk reward has to be in a meaningful balance based on the system's performance. And this is where you get bogged down. On the lowest level where you don't define things right, then it doesn't work your way. If your stop's too tight, you never get to target. If your target is too wide, the price pulls back. And we'll make today in our presentation a statement where you can reduce everything to one dimension, entry level. When the entry level is done for you, that is all taken care of all at once. Yeah, we reduce the decision to an entry level decision. If that's done, then everything else is answered because risk reward is in balance, time is taken out of the cohesion, and you have your target and your stop after your entry condition is fulfilled. And what I show you here is ranking at and above 65% probability. And I show you a little later why that is really essential and important for your future as a trader. Yeah, the trading variables, I described them briefly in the intro. How are they usually played out? Yeah, you see price change over time, typical moving averages, Bollinger Bands, MACD, stochastics. It's all price change over time that defines what's happening. 80% of the systems rely purely on that, whatever they do. 10% go on volume, volatility very few because it's difficult to track and trace. I'm talking about statistical volatility, so price change over time, not implied volatility, which is a part of the option, or combination of variables. And I'm going to focus with you today on the other part. I want to make you different because you most likely experienced it as a trader. You were in a trade, your stop was picture perfect, you wanted to make it happen, you got stopped, and then the price moved right where you wanted to go. And with a system that's not looking time-based on the decision-making, it looks price-based, we'll offer something unique to you. And we'll have clients that use them every day because we are more than 10 years in business. And that's our newest addition that we do here. The timeless trading, time not being a consideration. While the systems work for time-based too, but here on day trading, that's a wonderful thing to work with because we want to simplify your life and simplify your trading and let the chart tell when to buy or sell. So at any point, there's a price threshold. Yeah, sell 40, 58, 75. Yeah, so when the price development of the next candle takes out that threshold, there's a target dot on the chart, you take your profit, bang, done. Yeah, same here on the way up, buy 40, 67, 50, taken out, came to target, did you go a little higher? Yes, but that doesn't matter to us. We trade for the major price move, we look with our algos, and we let the chart tell when to buy or sell. And everything we do here is purely supply and demand based. Yeah, supply and demand defines the price. So what happens here, for example, you see here QS, quantity supplied, but the demand is higher. So with that, the price rises because the supply cannot keep up with the demand, and that makes rising prices. If the supply could keep up with the demand, the price would stay. That's the base economic principle we have in all of our decision-making algorithms. Money flow accepts the price as a result of a change in supply and demand, as I showed you on the graph prior, and we use that to predict the entries, the threshold, buy above a certain level, sell below a certain level, because we want, in particular, the big guys, the institutions, to be with you on your way to make the trade happen. Exits, where's your target? Where do you see with the most probability where the price is going to go? Where is a meaningful stop so that you can bring your trade to target? And with our systems and strategies, we want to help you to higher accuracy, because that's what a lot of traders are lacking. They do good trades and they do bad trades too, and they have higher losers than winners, and they celebrate the winners. But look, at the end of the day, only the balance at the end of the week, the month, is going to count. Yeah. And so we are only accepting trades that are directionally confirmed. So we're not guessing. The trade has to be directionally confirmed, and then we do it. And we exit at a predefined target, preventing the price from getting to something and then pulling back, because at a certain price expansion, it's lucrative for other holders to sell, and you will know it because the system is going to paint it right on the chart for you. And choosing an adequate stop to bring the price home so that you're not taken out of the game before the game starts. So that's all in it, and I'll show you day trading examples, and I'll show you some other swing trading examples too. Here's a situation. I put on crude oil futures. Yeah, April 4, sell 60.49. I magnified a little bit the signals. Yeah, so that happened. There's the target, and it came down. Yeah, absolutely, that was fulfilled. Pretty simple. Then situation 2, sell 59.45. Next candle takes it out. You can work with a sell stop order and a bracket order, because always you see here that little red line on the chart. The red line on the chart is allowing you to put the stop. Yeah, so you know it and you have your target, and also here on the dashboard at any point you have a relation between stop, target, and you see favorable, not favorable on the result you are aiming for. So here that trade came to target 2, but we wouldn't have taken it, because I'll share with you all the knowledge that we have in that, because one of our rules says we want to have a pullback if you are in the same venue on the way down, and here we had no pullback, so we wouldn't take that trade. This one we wouldn't take either, but this one was a trade to the upside. Those two worked, but look, they are lower probability. We want to be in at the high probability, taking those trades home. And I'll refer back to those charts after I shared with you the principles. Here's for the E-mini S&P 500 futures. I also took April 5 a snapshot to April 6. I show you newer ones, but it's always a lot of effort to put these charts together. Yeah. There is the buy signal. Yeah, 2 different algos said, okay, buy 40.39.50, bring it to target. These 2 we wouldn't have taken. They came to target 2, but then buy 4,064, bring it home. Target dot is right behind that one. Then we had time where nothing is happening. And you see here on the bottom, there is a time perspective, but the candles are not mapped by time. There's a different algorithm behind that. So after ambiguity, we paint uprising price moves in blue and down in red. When you mix red and blue, it makes purple, and in the purple zone, we don't want to trade. Whatever is in there is a signal, we're not going to take it. But when the purple zone is over, like you see it here, we take the trade, bring it to target, and that's what we did here on the chart. And I'll show you more of these examples, because I'm here to really demonstrate to you the opportunities that we can produce by rule-based trading. Yeah, rule-based trading looks as follows. I mapped out here in that concept 8 rules when not to trade, 5 setups you want to trade, and 2 considerations you want to take. Yeah, that's 15 rules. If you learn to drive a car or something like that, that's not a lot of rules. But also we have picture perfect situations where we describe those. Here you see the rules are simple. No entry at the exit candle. So the exit candle is the candle where the target is, and there you don't want to enter or re-enter into a trade. Very simple. No entry in the purple zone. Yeah, do not trade signals that cross line lines. Those are price gravitation lines which our algorithms paint on the chart for you. Yeah, no trades where a signal crosses the line line. And this is how we map it out after 3 SPU. A SPU is for us the measure how far a price move is reaching. After 3 SPUs, we say, okay, we settle it because there it's lucrative for others to get out of the trade too, and we don't want to be on the wrong direction. So you see, that's pretty simple, learnable, yeah? And we work only one-on-one with the traders because we have fixed systems, but we tailor-make our learning experience with you at your best available days and times, even weekends, yeah? And so here's the first situation when you want to trade, because the other 8 rules you had when you don't want to trade. Here you see we want to trade at the end of a purple zone, yeah? Ambiguity, direction is found, bang, we enter in the trade to the short side, as you have it here on the chart, and to the long side. Yeah, pretty easy. It's a top line signal. The stop goes 20% of a SPU above or below the candle, depending if it's a long or short opportunity. And so with that, you have a clear-cut way of defining when that's on the chart, that's what I'm going to do. And you do that, what I call a floating trend catching. Yeah, so the signal floats out of a containment area, wants to go to the upside and does. And it wants to go down to the bottom or fall, and it does. Yeah, and all of this is always described, and here you have your crossbars telling you, okay, that's where my stop needs to be, that's where my target is. Yeah, consecutively over and over, we do that in moving forward. Then there's situation with reversals. Yeah, in trend trade, we only take an in trend trade when there's a reversal. So you see here, opposite facing candle, this one we take, the others we don't. Opposite facing candle, the dark blue one here, buy signal after, there we trade. Is that simple? It's doable, it's learnable, but you know, in trading, stress comes in emotionally, second guessing a signal, and that's what we want to do. And one of our clients just said, look, since I work with that system, I can walk away from a trade without controlling it, because I see in a majority of trades, I'll hit my target and I win more than I lose. And with that, I'm comfortable of taking the next trade. Yeah, here we have power tower trades, and there we want to take a second on a top or bottom. And you see these continuations, always clear-cut sell rule, continuation rule, and reversal rule. No first leg, because we want to trade on the second with that signal. So that's not rocket science, that is learnable like traffic rules. Yeah. And we have top and bottom reversals, and you see here these trend lines. They help you to define which ones we take. The ones that put the head underneath that second line above the top line will take, and so on the bottom to the upside. These are all rules learnable, and we work with you one-on-one, and now you see them, how they are on the chart. This is why we took these signals. They were strong, and this is why we didn't take those signals here on crude oil, because there were weaker ones, and they not often always come to target with the high probability above 65%. And we, by knowing that, will take the trades that are more secure than the ones that are more risky. And with that, we achieve high probability. But you see, there's multiple trades in the day. So it's not that we are missing out. We have multiple trades in a day. When you're in front of your computer, you can take them. You can also hear an alert, because there's sound alerts in the background too of the software telling you something is happening and you better watch for the opportunity. Yeah, so then no shorts on lower trend lines. Yeah, so you see here that would be one of those, but on the longs, we're coming out of that. We are looking at the ES, the E-mini S&P 500, April 7 through April 8, and you see multiple opportunities which we took and which we carried out, and we stick to our rules day in, day out. But look here, in the aftermarket, we also have trades. There's trades in the aftermarket that just might take a little longer time to evolve, but they are there, and we have traders around the world participating in this. Yeah, here is the E-mini S&P 500 futures contract on April 13. Yeah, because I wanted to take just some snapshots a little further back and from today, so that you have an idea. We are not just having one chart where that happened. It happens repetitively, and that's what you want. The system that repetitively tells you floating down, sell 4, 11, 17, and 50. Yeah, bring it home. And also here you have a next dot, it says the max move. So if you trade more than one contract, and I hope you get there, so you let the second one float all the way down here, and you saw it took to this candle to bring it home. But that's a majestic move that we were able to capture, and you follow a system. You're not surprised that you were able to. So you see that again, situation 2, first target came out here, second target came out here. We're not always aiming for the moon. A lot of our traders recognize taking those petitions is super duper good, but trading at the strong price turning points allows us to then aim for the extra target. Yeah, and that's a kind of a 4-to-1 that in respect of reward to risk, that's a super duper opportunity. And here you have the reversal I showed you in our rules. Reversal is happening, situation 3, we bring this one home too. And then we recognize it's at the level of our 3 SPU development, so we're not gonna re-enter at that level. So here at the candle you see that was a signal on there, but we disregard it because with our rules that we follow, we're not going to take a trade all the way up in the sky because then it's too lucrative for us to sell against it. Yeah, so I'll show you the next day, April 14. Yeah, so yesterday. And we had a purple zone. At the beginning, people are annoyed using the system. So, man, it's a purple zone all day. Be happy to have it because you save yourself a lot of money within not entering. I cannot prevent the system to spell out these opportunities, but I can teach you to not trade in a purple zone. And when the purple zone is over, like you saw here, situation 1, yeah, we are coming down. Yeah, in a strong market yesterday, the signals that we took are 2 short signals. And you see here the max move is also on the chart. It happened here. And there we had another move to the downside. So the system is producing at these critical price turning points, giving you the opportunity to participate in the price move that's in the market, and also telling you when not to trade, which is important because this is usually where everybody gets ripped apart. You see there's signs in here for potential trades, but they weren't good because they were in the purple zone, and it's obvious to see if there's a purple underlying in a background. It tells you ambiguity, direction will be found when it's over. This is when I want to trade. Yeah. Okay, so let's go to the next one. What's that? April 15, that's today. While I already entered in here, I had a trade going on and I just took a quick snapshot, yeah? So a trade going on here, you see this buy signal 41.54.80, and we wanted to bring it all the way up to 60, and we did, yeah? And we did. So here is not the absolute precise positioning of the stop and the limit, but I just took a quick snapshot. And the important message is we had that signal before and we had that signal before. It's 3 trades starting from 9:38 in the morning to basically now, and there's nothing to manage here. I'll put my stop, I put my target in, and I let the price develop and move to the upside. And if you want to check back on your current charts, you see that we'll took out the 60, and this is how we brought that trade home. All of what I show you here is always documented. Also, when we do individual training, and I told you we only work one-on-one, all of that is recorded. You get the recording. It stays with you forever to relearn, because the biggest and most important thing for a trade is the discipline, yeah? To always stay with the concept. So therefore, we have written that all down, and we'll work with you over a longer period of a month or 2 months, depending on the program you're ready with. And if you want to continue working with us, we'll do that. We communicate a lot through a medium called Telegram, because there we can quickly shut some charts in, communicate with you, help you out, but definitely we have phone service too, yeah? But everything is always documented. You saw these pictures that I showed you. They are part of that concept, telling you when to trade, when not to trade, and how, yeah? Under which conditions will I enter? How will I go forward? I show you now the offer, and that's for traders that are serious, and also the advantage. Look, we have a one-time payment, so we have no reoccurring cost. If you paid off with the payback that comes from the system, then basically you are good for the future. You have the knowledge, you have the system, and we operate on Thinkorswim from TD Ameritrade, while a lot of our traders that do day trading, they work with NinjaTrader or TradeStation or other platforms where they execute the orders. The orders go to an exchange, but here we have a platform where you have free real-time data, which is a big advantage. Yeah? So therefore, you have the lifetime access to the software with free real-time data. You learn risk-limited strategies in addition to what I showed you here of the day trading, because in the hours that we work together, to make you different and to give you a different knowledge, there will be other strategies we cover too. You get coaching on the way because we work 1 month, 2 months, 3 months with you, and you get independent. You don't need somebody to call the trade who might go away or might make bad decisions. You follow an algorithmic system that has an AI component. What does it mean? It readjusts and resets to every asset and to every price move or every time move that can be on the chart. And you gain the experience from more than 10 years that we are in business, because I opened that business up in 2008. So we are looking at a lot of years where we were able to teach different traders our style of trading and move people forward, helping them not to move because the corporation wanted to move them, or move wherever they wanted to go, making them independent traders. Yeah, so our offer here, special offer, 8 hours of training, never lost trading, trend catching. What I showed you in the chart before was a combination also of trend catching and top line. I'll talk with you about that if that's interesting for you. You have the tutorial, the write-up of the concept, the indicators that get programmed for you, so you don't have to do anything. We'll do all of this in your account. Then you have 2 months of coaching. You have 2 months of never lost trading alerts, because daily we map out where are assets that have a demand or supply component and have a threshold where it says buy or sell above a certain level. And we participate in that. Yesterday, I just moved out of Goldman Sachs. Now, in hindsight, that was a great trade, but we were in it before because we had a signal, and we took it and we carried it home. Yeah. And so our special offer, trend catching indicators, they sell for $6,997. The box, you need extra to see that on the chart, $997. The timeless tick and concept, $2,997, and 2 months of alerts and coaching. All of that would come up to close to $12,000, but our offer here for that concept, $6,497, and it's individual teaching at your best available time and at your best available days. And it doesn't have to be taken in a certain time. You'll decide how you participate and take those 8 hours of training. Usually one unit we do about an hour. Some want to do about an hour and a half. One time I had a client, he bought 2 packages, and I did with him a weekend training, 2 times 10 hours. And next week he made $40,000. That definitely paid for his tuition because he understood what was supposed to be made. The question is, how much did he invest? He invested $4,000 in one of our option trading concepts. But today I talk about day trading. That's a package. That's a package for serious traders. I have one for traders a little smaller accounts. I show you that one in the continuation. But it gives you an idea. Yeah, it's an investment, but on the other hand, you are getting a lot. You have a system. You have no reoccurring costs. Often I get the question, can I pay that by months? Look, the thing is, we work through PayPal, work out with PayPal, 6 months no pay, or how to pay it back, or through a credit card. We want to focus on teaching the education and how to trade, not how to finance all that. That's not our expertise. There's other partners who do that much, much better. Yeah. And so payback time. So what does it mean? Imagine you have an initial capital of $50,000. You pay $6,500 for the investment for the never lost trading, including the timeless concept. So that's a big bargain. Then your remaining capital is $43,500. We always look like, don't go higher than a 2% risk per trade at the beginning. So that means here 2% risk would be $800. If you have 2 trades a day at 65% attainment rate only, often we rate much higher, then you have a 3 weeks payback on this one, just by trading 1 contract, most likely on the ES or on crude. Yeah, there's for other instruments, and I'll show you it works too. I just took some examples. It works with stocks. but I couldn't put everything in here because time is limited. If you want to see different performance of different assets, I'll be happy to invite you for an individual hour where we can work with that and give you a feedback on, you see then with me, how the system works, how many good and bad trades would be based on clear-cut conditions, entry, exit, stop. If you're ready for this, schedule an appointment with us, because I don't assume you push a button on this right now. Definitely not. We'll talk through how it works, what time works best for you, what do you want to achieve, and then we tailor make the entire program based on our concepts, based on our algorithms for you. Best write me, contact theneverlosstrading.com or call the office, but I would write an email if I were you, and then we'll get together and we'll look at the charts and you decide if you want to learn the concept as I showed it to you here. And there's more to learn than just what I showed. Yeah, we work with all type of accounts. So if you have a 401k, an IRA, besides a margin account where you day trade, all of this is covered. And in the coverage, we work you a business plan, which is going to give you an idea when to trade, how often to trade, what returns to expect. We work with money management so that you know how much do I invest per trade and how do I partition my money so that I make it work for you. Not only produce one stream of income, producing multiple streams of income. And when a trade goes wrong and you're a little longer term oriented, then we repair it instead of taking the stop. That gave the name never stop loss trading, but a little bit lengthy. All of that we do always risk limited strategies. That's the key thing. We help with trade finders. We have our never lost trading alerts, and they're all based what's on the chart. Price move indication by the system, where to enter, how to carry out a solid trade into the future. And so I give you some time-based examples too. Yeah, because I showed you prior, that was all price move based. Now we take a time chart. And here you have an example for crude oil too. And you see beginning of the year, okay, we're having here a weekly chart. And here it spells out clear cut, look, ambiguity. You saw that before. No trades in ambiguity zones. Good to know, yeah, because zigzag, zigzag, so that's when you get wiped out. But when we came out of here, yay, upside trade, upside trade, upside trade, upside trade. Those are all trades that came home. I have no influence on the signals on the chart. The system does. And that took surely more than 10,000 hours to develop. But I saw myself, I know a lot about trading, but without a solid system, I made also a bad decision, because then you get emotional, but here we are rational. We trade fact-based with clear-cut entries and exits. And here you see on the dashboard, targets are spelled out, stops are spelled out, risk and reward is put in a balance. You always have a feedback, and you have a feedback here. Okay, here I'm trading for on a weekly chart for $3.73. Yeah, that's a big price movement. But also when you say that's too big a ticket item, can you give me a derivative? Then I'll show you how you can capture that price move with an option, and we can condition it down to like $50 per risk unit. Yeah, that's all possible. Here's the US dollar, Japanese yen. Yeah, we're looking at a daily chart, and you see here clear-cut price points where to buy, clear-cut price points where to exit, and the red crossbar is giving you an idea where to put the stop, and risk reward is always put in balance. Here it was very favorable, 1.9 means for $1 of risk you get $1.9 of reward, which is nice. Not always the case, but I just take the opportunity how it is. Here's one-on-one. Again, you see here the purple zone, not worthwhile to trade, risky. When the risky time is over, bang, will come to the downside. And here was your target, 2 different indicators, even 3 here. They all said, sell me, yeah? Sell, 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 sell. And the sell happened and the price moved to the downside, yeah? So that's important. Yeah, so as said, we are training one-on-one. We work with algorithms. They paint all these charts. You learn what all these colors mean to you, how you read them. And we are more than 10 years in business. And with that, we are looking back on a lot of expertise that we want to share with you in our programs. Because probability thinking is one of the key elements. Probability thinking, I'll just puzzle together two different scenarios. One where you have 20 marbles in a bag, 11 green marbles that are winners, and 9 red marbles that are losers. So that's already a positive scenario. It's a 55% chance of winning. But on the other hand, if you have a 65% chance of winning, 13 green marbles that are winning, 7 red ones, and when you compare the two systems, is a 75% chance to win more than 6 games with a 65% system, and on the other one, you only have a 50% chance to win 6 or more. And that makes a big difference. You want to be on a high probability side, and that's what we created, the opportunity to participate continuously with a high rate of expectation. Yeah, and high rate of expectation. Yeah, so 55% system only has a chance of 50% to bring that home. But a lot of people, they celebrate their winners. It's a game of where you have to get your difference right. At the end of the week, at the end of the month, you'll need to have an income, and that's essential and important. Yeah, most beginning traders go with a low budget system. Yeah, because they say, yeah, I want to have a $97 system and make 100,000 with it. What's wrong with that picture? Yeah, only a couple of instances are sometimes validated. Yeah, we have data going back to whenever and whatever situation you'll ask us, we'll put it on the chart for you. Yeah, trades are not decided by numbers. I had a feeling, somebody told me, and all of that, and that contributes to 76%. These are all the mistakes that I made, and this is why so many traders that are not well educated, they lose their money to the market. See, the other side of your trade is prepared to take your money. They take a different perspective. If you are preparing to understand how institutional trading goes, how the algos support you in the right direction, you're not part of the 76%. Yeah. Or the other thing is you invested $97 for a system. After 3 losses, you hop to the next. You find the next one, $97 making you 100,000. I can guarantee you that's not going to work. That's unrealistic. And so with that, don't go for these crazy returns. Find yourself a system that consecutively produces, or gambling approach, 20% of all capital on one chance. That's not good. All of these are the typical mistakes that happen, and we try to work with you to prevent all of this by having clear-cut rules, because you know where your stop is, you don't move it, you know where your entry is, you don't budge on it, and you know where your target is, this is where you take profit. Yeah. And if you are trading on a smaller budget, so that the $6,500 that I proposed prior is not for you, I have something here for you that's called trade colors. We trade when 2 of the same candle colors occur and the high of the blue one is taken out or the low of a red one. Yeah, counting colors 1, 2, 3, trading is now easy for me. Yeah, so that's the background of that. And here you have an example for the ES where you see, okay, upside trade, and you always know this is how far I will trade. Yeah, so there's always on the dashboard, that's my exit. Yeah, so here you have the downside, there you had your exit. Yeah, again, a downside trade. And here, this perspective, I could now discuss every situation, but there's winning trades. Yeah, so, and there's also losing trades. Yeah, so here we got ripped apart a little, but we had more winners than losers on the chart, and that made up the final 8 winning trades and 4 losses. So that's a 67% attainment rate. So what's the difference between the first system that I showed you with all these buy signals? It produces more trades, it has higher accuracy, but still this is here at a rate of 67%. It's at or above our 65% spec that we do. Yeah, so an example here, again, from February from the ES, I try to keep different time perspectives. Again, we had 6 winners and 3 losers in the period that we were looking at. So that's, again, a 67% attainment. And we have clear-cut rules that you can spot and follow on the chart. Because our theme is let the chart tell when to buy or sell. And that's what we do consecutively with all of our system. Here our offer to you. Yeah, the internet price is 2,647. We have 5 hours of training, which we want to give you. You want that additional hour. That's a value of $400. That's how we calculate it. You get the NLT lime lines, yeah, because you need them for day trading to see where price gravitation lines are. That's a total value of 4,044. Special offer here for you as participants, 2,497. That's a $1,547 of a discount. Yeah, so that's when you wanted to enter with that. Or if you say, I just want to try you out, this is my start. If it works for me, then I upgrade, then you just pay the difference on the upgrade. Yeah, so you see the difference is here, if you trade for a higher price increment and more often, you obtain a higher value. Yeah, so therefore I made that little calculation on it. But this is still better than most of the rest of the systems that you most likely have available. And with that, you already get into the arena of the 65% attainment rate. So you have an edge to be in the market and to follow clear-cut rules. Payback time, so imagine you have $20,000 of capital, system investment 2,500, remaining capital 17,500, 2%, you can risk 350 per trade. That's very doable. And so if you do that at 65%, it takes you 6 weeks for the payback. I always look at the payback. The other system, payback is faster because it produces higher value and more trades. And so, but with here, 6 weeks payback, and then you trade for free, that's also hopefully an offer that you might want to consider. Yeah, and we'll do that consecutively. Here is again ES chart running through, producing 72% winners and 3 losses here. I could now go in all the situations, but it's pretty easy. Look, 2 of a kind, lows taken out, sell stop order, good. 2 of a kind, lows taken out, sell stop order. Yeah, here, 2 of a kind, 2 blue, that one is taken out. So we color, therefore it's called trade color. That's our entry level system into the algorithmic world of trading. Yeah, and these lime lines, I made them here in blue. They normally have lime color. They tell you when not to trade. Then you see now here, we wouldn't want to trade because there we got ripped apart. But when we move away from those price gravitation lines, that's when we go in. They are based on our own algo. We have nothing to do with Fibonacci. We don't think that that is a workable concept that you could put on a chart. If it was, we use it, but we had to develop our own price gravitation lines, which we call the lime lines, and they help you to define where the price likes to gravitate to. Yeah, so that's basically what I wanted to show you today. I think you have a duplication here of the concept here. And the key thing here is you have a one-time payment, no recurring cost. You have lifetime software access. You learn the risk-limited strategies and day trading, or when we work on your longer-term account, we'll do that too. Yeah, longer-term accounts can be 401k. We re-replicate together the individual assets that are available for you and then find a solution of how you decide how to trade them. Here we would go on time-based chart, and the system adjusts to that. How do we go on a time-based chart? We are working with you on weekly charts because you know in your 401k you don't want to shift by every little small thing, but on a weekly decision-making point you can decide, okay, do I stay in or do I rather move my money into a different concept? Which ones of the assets available to me have a movement? How can I do that? We also can work with you of how can I hedge such an account? Yeah, if things go wrong, if we are not going to 40,000 or whatever somewhere, if we have a divot in the market, when do you know how to get out and how to hedge to the downside without a lot of effort so that your account stays balanced? All of that we teach, with all of that we work with you on the coaching, on the way, and we have programs for continuation after that. But most of our traders, they get totally independent, and with that they trade with the comfort of the internet. So wherever they want to go, and some they travel the world, they just need a good internet connection and they can put their trades in. And as you saw with the one that I shared with you that I just did prior or during this meeting, yeah, it was pretty clear. Entry exit stop, and so either one or the other occurs on an OCO order, one cancels the other, or bracket order, and it happened for me. I had to only enter. Yeah, we want to reduce all your decision-making points to one, and you can gain a lot from experience and will not leave you alone. And it's not classroom style, because we saw adult learning is very inefficient in classroom style. The one wants to trade random lengths, lumber, futures, the next one Apple, and so everything crisscrosses on. We want to work with you, recognize what you want to achieve, tune the concept tailor-made to your individual wants and needs. And that's what we offer you here. I hope we were able to inspire you to come to a different world of trading. Our focus was today majorly day trading, and day trading is a wonderful thing to do because it limits your risks at any trade. So I'm just checking here. I have another 2 minutes. Do I have questions that I missed out on? Because often I cannot see this box here. So software programs, let's see. Sort Bitcoin. No, it wasn't for me. Do I need a program to trade according to your way? No, it is all based on Thinkorswim. You need to have access to Thinkorswim, and then it works. Is NLT only futures? No, we trade stocks too, and a lot of those. And so with that, we offer the full game. I just didn't put that here into the presentation. If you want to see how we do with stocks and options, I'd be happy to entertain a meeting with you. I mean, software program again, so we program everything for you. You don't have to do anything. It's in your account, stays there forever. How is the risky time calculation in the algo? I don't know what that shall tell me. The algo is not looking at time. The algo that I showed you today was a non-time based algo. Yeah, so it looks purely at price move. Time put in perspective, but it doesn't paint a bar by a time perspective. So that's the big difference. We'll use a different way here for the never loss trading timeless concept. While in general we work with time-based charts too, we just saw that the timeless trades gives you really an edge to make a good difference in the market.